I am actually actively looking for silver stocks now as much as I am gold stocks. Last year, my highest conviction trade was uranium, and this year it was gold. Like the takeaway though is that the gold stocks are still relatively on sale. And here's the actionable item. Here's the what to do with this information bit for the audience. There's a new buyer on the scene here. It's not just the central banks. Personally, I like producers that are actually good at the business and make money consistently, known for excellence of operations and with growth on tap. You know, there are 5-bagger, 10-bagger potentials galore out there in the catch-up phase.
All right, Lobo, we had a week of mostly bad news, really. It's what we've had, as you pointed out in your newsletter this weekend. Bad news is bad news for now, but then you also say that good news is not good news, and I'm not good at recognizing bad news to begin with. So what's good?
Well, a couple things. One is that bad news is good news thing is all about a central bank manipulated, if you will, or interfered with, or doctored or distorted economy. So when what the central bank is going to do matters more than the economic fundamentals, or I mean, they're supposed to be related, but you understand what I'm saying. You know, what moves stock prices, maybe not your decision as to, you know, whether to build a shoe factory, but what moves stock prices is what the Fed is going to do next with interest rates. Then bad news is good news because something bad for the economy is likely to encourage more generosity on the part of the Fed and monetary policy. So that's where that comes from. But there's actually a long-standing exception to this in a way, in that inflation is bad news, but inflation is not bad news that makes the Fed ease up. Inflation is bad news that makes the Fed tighten, or any other central bank should, in theory, do something to attack inflation, right? So the bad news is good news thing has had this exception, and the fireworks, such as they were this week, related around inflation. So you know, there was an apparent exception to the rule. But I also think that if you look deeper under the hood, you know, some of the apparent good news isn't as good as it looks. Some of the bad news, you know, it's subject to interpretation. But anyway, whatever all of that really means, whatever the truth of the matter out there, truth with a capital T might be, I think it's really interesting that we've had this, you know, for us as metals and mining investors, and particularly gold bugs, we've had this issue of inflation being bad for gold. You know, gold's supposed to be an inflation edge. And, you know, we have every time inflation looks hotter, gold goes down. Well, that's again, it's because of the presumed reaction function of the monetary authorities. So high inflation means higher interest rates in theory, and higher interest rates are supposed to be bad for gold, which doesn't pay interest. And we didn't see that this time. I think that's really interesting. You know, something has changed in the marketplace. And I think this actually fits with something we've been seeing all year long. You know, why is gold soaring the way it is? Or why has it been soaring? Why are we hitting new nominal all-time highs in gold? At the same time, the Fed is backing off its rate cuts. You know, we went from 6 rate cuts this year, supposedly, to now maybe no rate cuts at all, or maybe one by December. Right? That should be bearish for gold. But the short version is, without taking over your whole show, is it's pretty evident to many, many people you've talked to, as me as well, is that there's a new buyer on the scene here. It's not just the central banks, though the central bank buying has been very supportive. There's somebody with deep pockets out there that doesn't really care about the narrative that the mainstream media is touting. They're buyers almost regardless of the gold dollar exchange ratio, aka price of gold. So I think this is very interesting. We're at an interesting time. Something is different, and how that plays out in the very near term is anybody's guess. But longer term, gold is an inflation hedge, and I think that's supportive for gold going forward.
In the long term, Lobo, we're all dead. That's what my friend
That's the
said
very
like a
long
bunch of
term.
years
Yes,
ago.
Mr. Keynes,
Just kidding, of course.
famously so.
You
But
see,
sorry, but that's worth pointing out. That's a dodge, really. That's a crappy answer.
yeah.
You know, okay, if 50 years from now it doesn't matter, okay, fine. But nobody's investing for 50 years from now. Or, you know, or maybe the Chinese are with their famously long-term vision. But you and I, and my readers at least, have maybe a 1 or 2 year time span, frame of attention. So I don't think that's a very useful answer. It's a dodge.
Hmm. Well, you also mentioned a buyer as in singular. Is that intentionally or is that just a figure of speech?
It's because we don't know. I think it's a class. I don't think it's one person. I don't think it's, you know, I don't know, the Saudi wealth fund out there secretly accumulating gold, or China in some unofficial way. Like, we look at these central bank gold holdings and we get these figures, and the World Gold Association puts out these numbers everybody quotes. Well, where do they get it? They don't call all the central banks on the phone and ask them how much gold they have. They get it from the IMF.
Hmm.
And where does the IMF get it? It gets it from self-reporting from these governments. So, if you're a government, let's not name any names, but maybe a government that isn't known particularly for transparency and is known perhaps for having a long-term view of winning the long game and industrial policy, and the world is a monopoly board, and this isn't necessarily just one country that starts with a C or an R, but think about these Machiavellian types. Why on earth would they fully disclose what they're doing? Now, I'm not saying, therefore, I know X, Y, or Z. I'm just putting it out there as a thought to consider. So there is a new class of buyer, I think. We see action that is inconsistent with what we've seen in recent times. And to me, that's evidence of a new buyer. And I mean that as a class, not a single individual entity.
Hmm. Yeah, fair point. And I would obviously agree with that, given the stance of geopolitics right now, where everything is on edge. But that also makes me think that there's basically just really a couple of things that seem to influence markets right now, and that's the Fed's stance on policy, monetary interest rate policy, economic growth or the lack thereof, and then again the geopolitical tensions. And any combination of those just seems to be bearish for gold if you think about it in theory, yet gold's
Well,
hitting
no, wait a
nominal
minute.
all-time highs.
Geopolitical tensions are, when they flare up, that's bullish for gold. The problem with those is they tend to be a flash in the pan, right? Gold reverts to the trend after the flare up. And if the trend was upward, that's fine. If the trend was downward, that's bad. So right now, actually, a geopolitical flare up would just be a temporary tailwind for, assuming we don't go into World War III mode, you know, but a flare up would be another tailwind, and then the trend underneath is upwards. So I don't think we would then see, I don't think we'd see a flare up and then gold slide down. And actually, let me jump sideways a little bit here on you. We focus so much on the Fed and monetary policy because that's what Mr. Market seems obsessed with. And we're speculating on prices in the marketplace. So that, that's reasonable. But to give credit where due, Lynn Alden has really been the one out there banging the drum on fiscal dominance, as she puts it. And I don't want to overdo the Lynn Alden angle, because a lot of us have been saying it's fiscal as well as monetary policy. I don't know, every other week or so, I'll remind people, don't forget fiscal policy too. Don't forget that the so-called Inflation Reduction Act, while voted on a couple years ago, those appropriations take years to even get into the Python, let alone work through the economic Python. We're just now seeing many of those hundreds of billions of dollars actually hitting the ground. Like, I mean, shovels hitting the ground to build out what was approved, a couple years ago. So fiscal policy matters. It's always mattered. But what Lynn is saying is that there comes a point where fiscal policy becomes such a large factor that the monetary policy becomes less effective. And that fits what we're seeing, where the Fed, it's tightened at a record pace, starting from zero, and yet the economy seems fine, or at least the labor market seems fine. And that doesn't fit the model. And so this fiscal dominance explanation makes a lot of sense. And I bring this up not just to say, oh, hey, congratulate Lynn on this different view, but it matters because, my view has been hard landing. I'm in the hard landing camp. And now I don't think it lasts long. I think the powers that be, my view has been, we'll get into a hard landing, or we'll get into where it's obvious that we're going to have a hard landing, labor market and all. And then the powers that be will send out the money helicopters and cut it off. But the pain first. And the fiscal dominance argument from Lynn, and I'm not putting words in her mouth, she hasn't said what I'm about to say, but to my mind, that argument could mean that you don't get the hard landing. It could actually be because of all that fiscal stimulus, the fiscal dominance, that we get a soft landing or maybe even a no landing. Maybe they do paper it over. Maybe the amount of, even the more measured people, the non-hype people, even we may have underestimated how much of that fiscal pig was yet to go through the python. And the stimulatory effects of that could actually mean that I'm wrong about a recession being undeniable in the United States this year. I'm not giving up yet. I'm not throwing in the towel. I'm just saying, this is a scoop for you, Antonio, and your viewers. This is the first time I'm thinking this out loud here, but I've really been thinking about Lynn's position. It's a very thoughtful, credible, I think, argument. And again, she's not saying no landing, but I'm thinking that there's a counterweight here to my expectations, and therefore, at the very least, we oughtn't to be too cocky about our premises. And where does this go? Actually, I think this is good for gold or monetary metals either way, so that doesn't change that. Doesn't affect uranium at all. I know you don't care about uranium, but it's important to me. So my primary investment focus this year doesn't actually change. What it really affects is my stance on no industrial commodities for now. I've been saying, yes, I love copper. I'm big on oil, but not until after the recession. What if the fiscal dominance case that Lynn has outlined means that there's no real recession, no hard landing, and maybe the soft landing is so soft that we barely notice it? In that case, my caution has me missing the bottom. Already missed the bottom on copper, and oil is picking up. So maybe I'm wrong about that. Sorry, I've gone on too long, but you can take this any way you want. But final point on this is, if I'm wrong about this, I don't see oil exploding to $150 a barrel, absent conflagration in the Middle East. I don't see it going hockey stick style in the next couple of months. Copper's already moved, so I just hate chasing stuff, Antonio. So my view here is, let's see. My view is, let's give it a little bit more time. Let's see if this fiscal dominance really does mean those long and variable lags never show up, no hard landing, and then adjust accordingly. There'll still be money to be made if I'm wrong about the hard landing and there's a reflationary boom, perhaps, or just all that stimmy money, stimmy for corporations, not just individuals. There'll be money to be made then. Whereas if I'm right about the hard landing, if the shocks still break something, then imagine if I do an about face right now, Antonio, and then copper and oil tank in the next 3, 4, 5 months. That would be embarrassing. That'd be worse than sticking to my guns now and saying, okay, I missed the bottom. I'd rather miss the bottom than jump on the ship just before it sinks. We'll see what happens.
Good point. I also don't like chasing stuff, nor girls. That's why I married the first girl maybe the second girl who saw me naked, because I suppose my mom's a girl, allegedly. Now, what I wanted to kick it off with macro, though, is because I've been wondering how much all of this matters for what we do. And I apologize for putting you and I in the same basket for a moment, but for this example of speculating on junior mining, how much does all that matter is because I've been contemplating recently and complicating too, mostly in the face of what seems to be ramping up M&A, because surely the big mining companies know what they're doing, right? Or at least that's the assumption. And if a truly global meltdown is coming, if you're to trust YouTube, what are they doing buying now? Why is M&A even ramping up now?
Well, first, mainstream economics works on models that I think are incorrect. Stagflation doesn't even exist in these models. Right? If Powell says that inflation comes from expectations, And if people expect inflation to be 2%, like he has literally said that. I don't know if he believes it or not, but he has said that if people expect inflation to be 2%, it sort of will be. It's just so. So if you're a multi-billion-dollar multinational corporation, and are you going to hire some tinfoil hat gold bug to be your chief economist? Probably not. You're going to hire the best PhDs that you can, pilfer them from the Fed. And what are they going to tell you? Inflation comes from confidence, right? And everything's fine. So I don't know that I trust the crystal ball of the big producers more than anybody else. Maybe the gold miner CEOs a little bit more. They have to be if they're in that business, right? Your Mark Bristows of the world. I can't see him working for the Fed. Not to pick on one company in particular, but so no, I think I just don't see that as connected. And well, so I don't look to the companies for guidance on economics. If I it drives me crazy when people interview some famous copper company CEO. What do you think about the price of gold? Well, he's a copper miner, not a gold miner. What do you think about interest rates? Well, he's a copper miner, not an economist. Anyway, let's separate these. I think M&A has to happen just because mining is a self-depleting business. If I just tweeted about this, remember, buying isn't building. Right? If the discoveries aren't happening, if the big companies, when the recent downturn, the first thing they slash is their exploration budget. They need to focus on the bottom line. You're going to pay to keep your mines running. You don't have to explore for the next big mine that might come on 10 years from now if you're worried about your quarterly results and how shareholders are going to react to them. So you lay off all your geologists and they go start junior companies, and you muddle on, right? So if you're not making the discoveries yourself, you got to buy them. It's either that or you literally mine your company out of existence. Every pound or ounce you take out of the ground, if you're not discovering, is one less that you have until your last shovelful and you're done. So M&A has to happen. And if anything, I've been surprised by how long it's taken for M&A to tick up. It was overdue, I think, before the COVID lockdowns. And this is one where I, again, freely admit I may be wrong. I have some egg on my face on this one. I really thought that after the COVID lockdowns ended and people could travel again and do due diligence and so on, that we'd see a big wave of M&A because of, people not being able to do it during that time period. But it really didn't happen. There were a few big deals. We've seen a lot of consolidation at the top of the food chain, but very little has trickled down yet. So maybe, don't listen to me. I was wrong, 2 years ago now on this, but maybe it's finally happening now. Maybe, because I think ultimately, as I like to say, reality matters. And the reality is, as I've just been saying, if you don't discover it, you've got to buy it, right? And buying it isn't building it or discovering it. So there's a real supply shortfall here. It's a vicious cycle. And there's only so much consolidation you can do at the top before you have to start reaching down the food chain. So I think M&A is overdue. I think it's, because I've been disappointed in recent years, I can't say, yes, this is it. We're off to the races. This is the year. All our crappy little juniors with big discoveries are going to get bought. But it might be. I don't know. How useful is that? It might be. I hate a headline with the word could in it. The takeaways are it's overdue. It has to happen. So I may be wrong about this here, but how long can it be put off? It's been put off for years already. M&A has to happen, or else these larger companies are going to mine themselves out of existence. I don't think they'll do that.
I look at these companies as growing in bureaucracy, if that makes any sense. I mean, the mining companies have grown a whole lot over the last couple of decades, or it's almost 2 decades, I suppose, that you're involved in this space now. They've grown in bureaucracy a lot. Buying, a miner buying a junior developer, an Explorco is no longer happening in the same way. It has to go up the chain 17 times before it happens.
Well,
that's kind of how it feels to
sorry,
me.
let me push back on that. I'm not sure that's true. When you have these big deals, you lose C-suite people, you actually streamline. When Newmont buys Newcrest or Barrick bought Randgold or whatever, you don't double your headcount. You get rid of a whole bunch of people who then go start junior companies, right? So those same assets now have fewer managers. So there is some streamlining there. The 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 mismanagement on part of the majors was, as Rick Rule likes to point out, turning a sevenfold increase in the last big bull market in gold price into, less or into negative free cash flow, right? That took real talent, as he says. That's different though from bureaucratic bloat. And I gotta say, here's another mea culpa going way back to the beginning as a younger buck with no white in my beard. I really admired the gutsier, bigger players like Kinross at the time. Kinross went into Ecuador when other people wouldn't, and Kinross went into Russia and parts of Africa when other people wouldn't. But in subsequent years, Kinross got their posterior handed to them a number of times. They ended up walking on, after spending hundreds of millions in Ecuador and then walking, and now that's Lundin Gold. So they chickened out. And they bought 13 million ounces in Tanzania that turned into 3 million ounces or something like that. They made a number of gutsy moves that objectively later didn't work out for them. So, I criticize the bean counters, right? A lot of these big companies are run by accountants. No offense to any accountants present. But these bean counters, they weren't miners, they were just accountants, they didn't understand and so on. But looking at experiences like Kinross's and other, bold moves, I kind of understand the bean counters better now. Like there's a reason. It's basically the bean count, it's math. If you dismiss a bean counter, you're dismissing math. And that's never a good bet.
I really the only reason why I look at these at what these companies do is to try and gauge maybe some sort of a direction as to where the market is going. Because Newmont, for example, you brought Newmont, they released their earnings results last week for the first quarter of this year, and so you had EPS, just at EBITDA, skimmed, upsized, turned around, consolidated, discretionary earnings, and whatever other made up metrics they were coming up with. They had them all better than expected, beat on expectations, but they still somehow managed to create negative free cash flow of $74 million, whereas positive was expected of 150. And so sometimes I really wonder, like, why even bother with these companies? Even if you're bullish on gold, why even bother with the producers? How do you look at that?
Well, producers as a class, you can't take one and hold it against. And by the way, the Newmont report was regarded as a big beat by almost everybody. And I haven't looked at where the cash flow went, but there's a big difference between having, a net loss or blowing cash on higher OPEX or higher CapEx, suffering, you're sustaining capital costs more due to the excessive inflation we've seen in the mining space. Like if you're just spending more and making less and therefore accumulating less cash, that's not good. But if you're investing in growth of the business, if your free cash flow is affected because you're expanding a mine or something, that's not the same thing. That's a growth story. So I don't know the answer for the free cash flow in this particular case, in this particular quarter. I haven't looked at that metric. But I want to say two things. So one is the go-to names in the space. So there's producers and then there's big producers, the household names. Newmont is the biggest gold miner in the world. Whether it deserves to be, the first stop for people's gold investment dollars or not, it's going to be. If you're a generalist investor and you get excited, gold goes back over 24, goes on at 2,500, right? Headed for 3,000. You know nothing about gold. Where are you going to go? I want leverage. How can I make money on this gold? You look up gold miners. First thing, Newmont, largest gold miner in the world. So whether they deserve it or not, whether they're accumulating cash or not, whether they're investing wisely or not, I think the biggest gold miner in the world, and I don't own the stock, I'm not promoting it, by the way. I'm just saying it's going to get investor attention come the day. That's why we call these big ones go-to. This is a Doug Caseyism, my mentor, Doug Casey. The go-to stocks are going to get that attention when new money rushes into the space. And even case in point, again, not to compliment Newmont, but just as an example of the concept, proof of concept. It wasn't just Kitco and so on talking about Newmont's. It was Yahoo Finance and Bloomberg and mainstream financial media talking about Newmont. I remember it got that day that they reported, it got talked about with Intel and whoever else was reporting that day. And you never hear about mining companies on days like that. This earnings season featured a major gold company in a way that I haven't heard in a very long time. So that's an argument for the class of the go-tos amongst the producers. As far as personally, I like producers that are actually good at the business and make money consistently, known for excellence of operations and with growth on tap. And I would apply that up and down the food chain. If I want a producer, then I want people who are actually good at it and they're going to make more money. And I'm just very conservative. I want, losing money is a cardinal sin for me. In my take service where I rate all those hundreds of companies, I routinely give a company a thumbs down, no matter how excited people are about XYZ discovery, because they're a producer and they're losing money. If you're a going concern, you're not supposed to lose money. So that's my view. If you got a solid business and the underlying commodity is going up, then the laws of business, the math hasn't changed. And so that should be a good, if not investment, speculation. The other thing, sorry, but just real quick, I want to say about this is, and we may have talked about this before, the chronic underperformance of gold stocks in general to the metal, not just the producers, but the stocks as a class. Why do we even bother with gold stocks at all? Why not just buy the metal? Well, because the stocks give us leverage. And if gold goes up 1%, your typical gold stock will go up 3 or 4 or 5%. That's why we bother. If they're just going to do what gold does, let alone do worse than gold, right? We won't buy them. Why add risk to the metal? And this copper, anything else. Why ask risk to the metal if you're not going to get any leverage to the upside? And so I've written about this as a free article on the website right now. Are gold stocks broken? And I encourage everybody to read that. It touches on some of the things we've been talking about already, including Rick Rule's free cash flow argument. The point here, though, is that it looks like the companies are mending their ways. It looks like the companies are not going out buying willy-nilly all kinds of assets, whether they're good or not, just to put ounces on the books, which touches on the M&A question. And it looks like they're actually trying to run a good business and deliver to the bottom line. And so we're starting to see that. We had, Agnico beat, we had Newmont beat. Now we got to see if Barrick beats. Barrick has guided that this first quarter is going to be the worst quarter of this year. But if, look at the gold dollar exchange ratio for Q1. Even if this is the worst quarter of the year, if Barrick beats as well, they've set a low bar. If they beat as well, you'll have the top 3 producers available in the West beating. And that should get some attention. That should let people know that, hey, this underperformance in the past, management got the memo. They're working on it. They're doing better. They're actually focusing on the business of making money mining gold. And I think that could be a big turnaround, exactly what the gold stocks that have been lagging need.
At the Deutsche Goldmesse a few months ago, you said that gold was a no-brainer, and that was actually sub $2,000, and so it's up what 15% now, I suppose, even more maybe, flirting with that nominal all-time high all the time. Does that mean that with those stocks underperforming, does that mean that the gold stocks have now become the no-brainer?
Yes.
Well, that's the interview done. That's it.
Interview time.
That's a simple answer. Yeah, no, and go ahead.
So first, I thank you for giving me credit for that. A lot of people are pointing this out and remembering that last year my highest conviction trade was uranium, and this year it was gold. Like going into the year, like in late 2022, my trade for 23 was uranium. Not that I hated everything else, but my top trade was uranium, and this year was gold. And people give me credit, but I have to say that was on the basis of my hard landing outlook and stagflation, which just now is beginning to get in the headlines. But gold has gone way up, without that. So I was right, but not for the reasons I argued. So it's arguable whether or not I was right. So I'm not trying to poo-poo myself. I'm glad that my portfolio is responding well, but I just think truthfulness, honesty, I don't know what it requires me to say. If you congratulate me on making this right call, then I'm not right for the reasons I thought I would be. Therefore, I'm not sure how right I am. Now, I'm still thinking, for our macro conversation at the beginning of this conversation, I still think the same way, and I am very bullish on gold. But the takeaway, though, is that the gold stocks are still relatively on sale. And here's the actionable item. Here's the what to do with this information bit for the audience, is that if you have a gold stock and it has done squat in this breakout, that's the market telling you something. There's something wrong with that story. Now, maybe you alone have identified this super misunderstood gem of a crappy little mining stock, right? But maybe not. Maybe everybody else out there, not just mainstream investors, maybe the other people in the gold space or the copper space or whatever that's not responded to your story, maybe that's a reason to reconsider your investment thesis there. Whereas the ones, okay, the gold dollar ratio has gone to all-time nominal highs. The stocks haven't yet, but they've moved. You understand what I'm saying? The market is giving you an indicator here. So if they've moved, but they're nowhere near as high as they should be, that's an opportunity. If they haven't moved at all, that's a red flag. At the very least, please, dear audience, that's a red flag. Reconsider your investment thesis. If that thing doesn't move at all with gold as a gold stock, why do you own it? Same for copper or anything else.
But this is the internet, Lobo. When something like that happens, you don't reconsider. You just dig in your heels and have a fight with someone anonymously. That's how these things work. But this is actually a very good point that you bring up that I think not many people are considering, because some things are just cheap for a reason. Yeah, again, not something many people talk about. But so gold is no longer a no-brainer, but gold stocks are a no-brainer. Or are they both a no-brainer at the same time?
Well, I have mixed feelings on this. And I know that people like me to just say, yeah, it's going to $3,000 and convince you that I'm right. And therefore you feel good about what you're doing. But again, it's just not an honest way to do things. Gold has exceeded my expectations for the year almost already. I was thinking 2,200, 23 would be great. Maybe by the end of the year, 24, 25. And we've already, kind of gotten there. So, so yeah, if I have a thesis and I'm already, at the end point or an end point, then, that calls for caution. On the other hand, it happened for other reasons completely different from my expectations. And my outlook remains the same. So if the factors come into play that I thought were going to take gold higher, and that's still on tap for this year, then logically it still should go higher. So I'm cautious about telling anybody to buy when we've just hit nominal, at least all-time highs. That's difficult for me. But it's easier if we look at the stocks, because the stocks are not at nominal all-time highs. So gold itself, I would not buy as a speculation right now. Of course, stacking bullion is a completely different thing. That's savings. That's not the question here. But like if I wanted to trade gold instead of save in gold, when we talked last fall, then I might have bought an ETF to speculate on the gold dollar exchange ratio rising. I would not do that today, but I would buy the stocks, because the ones that at least are responding to gold, they've curved up, but they have a long way to go to catch up, let alone to deliver the leverage that we know and love from the past in these markets. So, there are 5-bagger, 10-bagger potentials galore out there in the catch-up phase. And if gold does go to 3,000, as not, crazy tinfoil hat Lobo Tiggre thinks, but JP Morgan, right? The headlines, the old Hoover Dam through the garden hose metaphor, all that stuff comes into play. So again, I'm not promising the moon, but that potential is there. I mean, it's visibly there. To say that this isn't a price forecast. I'm just saying, hypothetically, if gold goes to 3,000 by the end of this year, that's an if question. But so what? The what happens then? I don't think that's an if question at all. you know, the stampede that would promote or spark would be epic.
I like how many disclaimers you have to give with your predictions here, because that actually tells me more about the
And yet you
sentiment.
accuse me of making predictions.
Yeah, that tells me more about the sentiment, because you know, people are gonna get mad at you nonetheless in the comments. There's gonna be
Yes,
someone mad at
yes.
you, and that tells me a lot about the sentiment actually. So it's kind of funny. Do they have to though, the stocks? Do they have to catch up with gold? Can we just see gold crash back down to 1900s and the stock just ignore all
I
that?
think that's what the stocks are telling us. I think the stocks for years now have been telling us that 2020 was like the 2011 spike,
Mm.
and therefore the stocks are leading gold down. I think that's what Mr. Market writ large, including the mainstream people that allocate some portion of their portfolios in this direction, as well as the the smart money in the space. Not you and me, not the average retail gold bug out there, but
Mm.
Mr. Market writ large has been telling us via the gold stocks that it or he expects gold to go down. But I think he's wrong. I think he's been manifestly wrong, and I think increasingly undeniably wrong, especially this year. And my prediction, if you will, or the so what, the consequence of that is that alligator chart between gold and gold stocks snaps shut, but not with gold coming down to the stocks, but with the stocks coming up to match gold, and then the hubris and euphoria takes them higher. That is my expectation. We'll see whether I'm right or wrong.
Not your prediction, just for people listening, it's an expectation. But do you think there's I know you're a fan of sort of the
Sorry, Antonio, we both got places to go, but you're needling me, and that's fun. That's fine. I'm a big boy. I can take it. But there's a reason for this, okay? I'm not just trying to avoid being wrong by making some bold prediction that doesn't turn out. If I give you a price target, it will be wrong, even if it's close,
Mm.
right? Or if I just say I think it's going up, I got a 50-50 chance of nothing else of being right. But that's not just it. I think that without throwing anybody in particular under the bus, these bold statements that sound logically backed, and yes, this, it's cheerleading, and I think it's dangerous to the average investor. I think it makes more clicks, those videos with those exciting headlines, right? $10,000 gold, whatever, they get more clicks, but that very thing makes them more destructive, because people will make emotional decisions based on if not when guidance,
Mm.
at the very best, if not when guidance, right? And then that I think this is one reason why silver is so hated right now, or at least until recently. The move lately has healed many wounds, but until a month or two ago, people hated silver so much. I think this is exactly why, because silver bulls got so uber bullish, right? Silver's more valuable than gold. Silver's more, blah blah blah. Just. And then it did nothing, right? Or it went down. It disappointed. Silver never got up off the floor after 2020 the way gold did. And a lot of people got burned by these bold predictions and pounding the table and all that stuff. So that's why I do this. It's not just that I'm a chicken shit and I don't want to say what I think. I'm giving you my expectation.
Mm.
It's because I don't want to stampede anybody into making, a rash decision that can lose them money.
Well, the only reason why I'm needling you and trying to get a prediction out of you is because I'm trying to battle the oversupply in the podcasting market and get some edge there. But no, I obviously appreciate your level-headed view. Darth Silver comes to mind too, now that you're bringing silver. There's a little bit of an alligator crocodile jaw there. How does it slam shut? Does silver follow gold, or does gold come down to match silver?
Well, even Darth Silver has to look at the data, right? And I find it very encouraging that, for the last year or two, we've been seeing silver act more like an industrial metal. We've seen it respond to things that would move copper and oil up on days that, gold dropped. Overall, the overall correlation between silver and gold remains very high, even if the gold-silver ratio has widened. But on a moment-to-moment basis, on headline news movements, you can see silver respond to industrial inputs. And so that's part of the Darth Silver thesis. But ever since last October, when the new flare-up happened in the Middle East, that has changed dramatically. We've seen silver responding much more to monetary metals, financial headlines, geopolitical headlines, that sort of thing with gold. So that's good. That means that even if, Darth is ultimately right 10, 20 years from now, right now, silver is still acting like a monetary metal. So I have actually changed my marching orders on this. I am actually actively looking for silver stocks now as much as I am gold stocks. Whereas before I was kind of like, well, let's see how the recession impacts silver.
Hmm.
Now I'm not waiting for the recession on silver. I'm willing to buy a silver stock. My problem with silver stocks is not silver or the macro. My problem is political risk. There's just so few great silver deposits that are not in kleptocratic countries taking a turn for the worst.
Hmm. Do they have to be deposits? Do they have to be that far up the Lassonde curve for you to get interested?
No, you know that my favorite part of the Lassonde curve, as we've discussed in depth, is the pre-production sweet spot. Another free report on the website, if you won't mind my saying so. But the other part is that discovery phase, and there's I think a common misconception. People think of the discovery phase as being that first discovery hole, and the stock, doubles overnight when you get this smoking hot drill hole, right? And that does happen, but that's not the whole discovery part of the Lassonde curve. It's a whole process from that discovery hole or pre to roughly resource definition. So there's that and okay, if you miss the discovery hole, you're not likely to get a 100 bagger or maybe even a 20 bagger. You might only get a 5 or 10 bagger, but you still can make a lot of money betting on what I call success in progress. The discovery's been made, it has predictability, like they have a theory, it's a vein, it's a disseminated, whatever it is, and they're drilling hits where they expect to hit. There's a long way to go from that first discovery to, okay, now we have a deposit, what do we do with it? Is it economic and all that? And that is a reliable area to speculate on with much less risk because nobody knows who's going to make a discovery. Sorry, I
Hmm.
got on a rant here. Another free, if you look for success in progress on the website, you can see that report as well. But I forgot what the question was.
The question was whether they have to have a deposit, meaning
Oh, right.
what kind of silver stocks are we
So
looking for?
yes. Now, so yes, so I will bet on success in progress. No official deposit yet, but clearly a significant discovery. Personally, I don't bet on pre-discovery exploration at all.
Hmm.
I don't care how big the land package is. I don't care how prospective it is. I don't care if the neighbors next door have a multi-million ounce or, millions of pounds of uranium or whatever it is. Zero, zippo. Because you never know. That's an if not when question. Even with the best management, the best land package, best jurisdiction, you just never know. But it's also partly because I'm a newsletter writer and I've got all these people looking over my shoulder, my track record. What have you done for me lately? So I can't wait 5 or 10 years for a good prospect generator to turn up the next silicon discovery in Nevada as a newsletter writer. As a private investor, I could. So what I'm saying, the answer to the question is yes, I would go all the way down the food chain to pre-discovery exploration on a great prospect generator whose management I believed in, who had visible ability to raise capital, even crappy markets, right? And could pick good projects, had a track record of success. They're doing it again. Yeah, I would go there and I would be patient. And if it took 5 or 10 years for the next big discovery, so be it.
Hmm.
It's just not a good thing for me to do as an evil scum of the earth newsletter writer.
Hmm. We'll have to do an episode on land banks too. They could be interesting in going in silver prices that are going where they seem to be going. Last point though, before I let you go and pack for Frankfurt, taxes. The only thing better than chocolate ice cream, at least for people who are allergic to chocolate ice cream. They're going up again in Canada. Once again, specifically capital gains taxes. Is this gonna kill Canadian mining? I thought we were saving Canadian mining. What's happening?
Well, as Doug Casey likes to say, you can run, but you can't hide. I mean, there is no, or Rick Rule, it doesn't matter the color of the skin of the person who robs your money, which is his argument from against focusing on just Canada. But there's some misconception out there. And I'm not a tax expert. This number one answer is consult a tax professional. but there's some misconception out there that there's a new threshold. There's an inclusion rate for how much of your gains you have to take in a given year or not. And that's increasing from 50% to 66.6% in Canada. That's an inclusion rate. It's not the tax rate. And I haven't actually looked at what they're doing with the actual tax rate, but I've had people ask me, oh, taxes in Canada are going to 66% on capital gains. That's incorrect. So I'll just leave it at that. This requires, input from a tax professional. Taxes are, of course, are part of, the other thing, sorry, is that this is a tax on the investor, not the company. So at least the changes I've seen in Canada make no difference to the mining business in Canada. They may affect the outcome for investors. But remember, Canada also has tax incentives. They've got the flow through funds and things like that, super flow through. So no, nobody likes to see taxes going up, but I don't see the death of the mining industry here.
Taxes, the flow through premia also seem to be fluctuating here and there, supposedly or allegedly coming down. That's something that I need to look more in depth into, but apparently not that much of an issue. But yeah, no, this is a good point. I know I have to let you go here, so thank you so much for doing this, Lobo, and I'm looking forward to our next call.
All right, final word would be long-suffering uranium bugs. People only like prices when they're going up. None of this. But I remain absolutely bullish on uranium. My gold thesis this year doesn't mean I'm any less bullish on uranium. I think the current correction is great for anybody that missed the rally last year. And if I find something overlooked that has a compelling value proposition for me, I'm willing to add more uranium to my portfolio right now.
All right, well, it looks like you're going to be right with this whole Russian uranium thing happening, but that's something for New World Talks, Lobo, that I'll have someone else talk to me about it, or maybe you potentially in the future as well. But I have something coming out on Friday that's going to be interesting in that regard as well. Nonetheless, thank you so much for being here, Lobo. Again, I'll let you drop off now as I'll be moving to the CEO barbecue segment of this episode. As always, though, for people listening, fair disclaimer, non-honest confession. I don't hate you. Resource Talks doesn't hate you. And so you should know that, first of all, I have no idea what I'm doing. I have never booked any serious profits in this space. Yes, I do have one paper win that everyone keeps bringing up, which I'm very thankful for because it kind of makes my ego feel good. But at the same time, I also haven't booked any significant profits yet, so it's still mostly a paper win. And I should not be considered any type of authority here. I don't have the track record to tell you what I'm doing with my money or what you should be doing with yours. So don't listen to me blindly. In addition, I should be considered biased because this channel exists for me to learn and also make money off. So Thesis Gold and Gold Terra Corp, two companies that you're going to hear later on in this interview, have paid for the production of their interviews. The other two companies I'm interviewing out of interest, but that doesn't mean they're not going to become clients later on or eventually have some sort of a relationship with any of those. So generally, you should consider this as part of their marketing packages. Okay, this is not research. This is mostly marketing. That's the part where I say we don't hate you because most people out there will like to make you believe that it's research. Most of the times it is actually marketing. So those are, at least tens of seconds of research might have gone into this. And although I never give the questions to the companies up front, nor do I give the companies editing rights, and I always ask my own questions. No questions are off the table. You should still be skeptical of everything you see and hear in here and consider everyone biased. That's pretty much it. These are all going to be general and impersonal, private conversations between two talking heads or multiple talking heads on the internet, actually, because I think I have multiple people joining me from Western Metallica, and then Dryden, I believe it's also going to be two people joining me, but still just talking heads on the internet, right? If you don't enjoy losing money, you should head over to setterplus.ca, where you're going to find the company's official filings. You want to read the MD&As, you want to read the management information circulars, you want to read the annual reports, and you want to read the technical reports, wherever that's available. I really need you to understand those, again, unless you like losing money. And then go and talk to an investment advisor, official licensed investment advisor, before taking your own decision in the end, because this sector is a risky space to deploy capital in. And were you to decide to do that eventually, you should do so cautiously and do a whole lot more research. Obviously, also forward-looking statements. There's probably something on your screen right now. Please pause it, read it because those are stuff that you should understand. Again, and with all that said, though, I am going to be starting off today with a quick but hopefully informative trip to a company that just had a news release out. So I'm going to the Golden Horseshoe of British Columbia, where I'm visiting with a gentleman and a company who need no introduction, with that being respectively Ewan Webster and Thesis Gold, which is a gold development company. Thesis is listed as TAU on the TSXV, where an average of about 700,000 shares trade each day, with a 52-week high of $1.11 and a 52-week low of 37 cents. With 174 million shares outstanding and a $122 million market cap. Today, this is a 70-cent stock. Again, I'm not doing a full overview here because I've done one in the past. So for newcomers, I would recommend watching that video or those multiple videos that I've done with Ewan, because they give a good representation of the company in its entirety. But in a nutshell, after merger with Benchmark Metals last year, Thesis now controls two projects in the Toodoggone mining district of BC, with that being Lawyers and Ranch, which have been this week actually combined into an updated mineral resource estimate showing about 4 million ounces of gold in the measured and indicated category and about 700,000 ounces in the inferred category. Those would be at a little bit higher grade, so respectively that would be 1.5 and 1.8 grams per ton. And that's gold equivalent, by the way, with silver making up about 25% of that resource. And I suppose this resource will be the focus of the discussion today, but it's not going to be it's not everything, because again, this is only an MRE, but Lawyers and Ranch are expected to come into the PEA stage, which again will include the open pit as well as the underground portion on Lawyers, and it will combine those two with a resource on Ranch into one study expected by Q3 of this year. First things first, though, Ewan, well, obviously, thank you for being here. But also 4.7 million ounces of gold across all categories. Did you expect this more or less? Are you happy with it? Talk to me about that.
Yeah, thanks, Antonio. Pleasure to be here again, and very much so. I mean, this is a huge milestone for the company, and it goes back to, as you mentioned earlier, the merger with Benchmark. Post that, we put forward a very kind of strategic plan where last year we completed 43,000 meters of drilling across both projects, and that is all kind of fed into this new global resource estimate. And it falls very much in line with what our expectations were. I mean, in my head, we were aiming for between 4.5 and 5 million ounces. We've landed right in the middle of that. The grades come up a bit. And the really nice thing here is that 4 million of those ounces are in the M&I category. So there's a lot of confidence in this resource. And they're at a fantastic grade for an open pit project in northern BC at 1.5 grams, with real indication of a strong underground scenario to complement that as well. So very, very pleased with today's results.
We've also been talked about continuity a couple of times. I believe one of the first times you came on here, we talked about continuity. You basically said, let's wait and see how that's developing. Well, this is the C part of the wait and see equation. So how's that developing?
I mean, I think the numbers speak for themselves. But the 4 million ounces at M&I, I mean, the drill spacing on that is extremely tight and is held together extremely well. So, and I think that the drill results from last year spoke to that as well, even in advance of the resource. I mean, we were drilling, especially at Lawyers, deep on Cliff Creek and deep on Jukes Ridge, and we planned out our drill spacing, and those were all expanding on the known mineralization, and we just hit as expected. There was no surprises there, and the system is very much still open at depth. So, I mean, I think that alone demonstrates the continuity that exists here.
Yeah, fair point. I'm happy to see it here. So again, a lot more ounces than what was previously, I suppose, officially on paper. Because I mean, up until this news release, you basically had 2.1 million ounces that you could officially go out and talk about, right? And then now you have more to talk about. There's the continuity, the grade is picking up. Interesting note too. Yeah, go ahead.
Sorry, I was just going to clarify. Yeah, so there was the resource on the Lawyers project was 3.5 million ounces.
Hmm.
And then when they put out the PEA in September 2022, that turned into 2.1 million mineable ounces, which is what you're referring to. So they only got a 60% conversion on that from the resource to the PEA, and that's because none of the deep ounces actually made it into the mineable ounces in the PEA. They didn't look at an underground mining scenario. So I think when we get to the updated PEA with this resource, you're going to see a much, much better conversion of ounces to mineable ounces.
Okay, so that's exactly that. Well, that's one point that I wanted to ask you later on. But now that we talk about 60% conversion is what you had before, what would a reasonable conversion be from here to PEA in your opinion? What would a target conversion be?
I mean, I'm hoping that we can convert about 80%.
Hmm.
And don't hold me to that, but right now that's what we're looking at, and I think it's pretty achievable.
Okay. Yeah, 80% sounds reasonable. Yeah, that's typically what the expectation would be here. I'm happy that it's not the 60% because I was actually under the impression that might be the thing that you move forward with. So I'm happy that it's 80%. Um, Something else that I want to talk about again is mentioned equivalent grades, and there's a silver in there and all that, all these things. Again, the numbers maybe kind of speak for themselves, but there's also some copper on ranch, but there's no copper on lawyers. How come? What are the geological differences that make for the lack of copper at lawyers?
Yeah, I mean, basically all of the silver ounces are at ranch, sorry, at lawyers, and then there's virtually no silver at ranch, and that is, as you said, because of geological difference. I mean, on the lawyers project, it's a low sulfidation epithermal system. It's gold silver, and it is fault controlled, very simple, very vanilla, basically. It's metallurgy wise, geology wise, mineralization is very straightforward. Um, and then on the ranch project, it is a high sulfidation epithermal system. And really the main difference between the two is that at ranch, there's a lot more sulfide associated with the system. And it's typically as pyrite, but there's also some copper in there as well that you noted, which makes up a tiny amount of the resource, but it's predominantly as well located within kind of one main zone at ranch.
Hmm. And on ranch, the assumption, as far as I understand, or the hope, is that it's being fed by a porphyry at depth, basically.
Yeah, I mean, that's it exactly. There's no way to generate a high sulfidation epithermal system without an underlying porphyry really driving the whole thing, because it's just part of the larger porphyry epithermal environment. And typically what you get is you have the porphyry at depth, and when it's active, that's the heat engine, that's what's driving the fluids, that's what's driving the volatiles and the mineralization. And above that, closer to surface, you get the high sulfidation epithermal mineralization forming. And that depth can vary between, it can be a few hundred meters to kilometers. And we don't know what that depth is yet at ranch, but spatially, I mean, I think we're probably very proximal to what the source is. And the footprint of the alteration that we see on surface is about 40 square kilometers. So it's a huge structurally controlled epithermal system where we've really just scratched the surface. And the nice thing in the Tutagon is that, I mean, about 45, no, it's a little bit big, more than that, maybe about 60 kilometers to the southeast of us is Centerra Gold's Kemess copper gold porphyry deposit. And it was an active open pit mine, and it closed in about 2012, I think. But they mined about 750 million pounds of copper and 3 million ounces of gold from that porphyry. And there's still a big reserve underground as well that they're looking at potentially block caving. Point of this is that there's economic porphyries in this area, and we have that gold copper footprint at ranch. It's part of a much larger system, and yeah, so it is, there's porphyry potential there for sure.
Wouldn't the alteration system here help you orient yourself as in how deep the porphyry might be in the system? Like if there's potassic alteration, then you're close to it. Obviously not a geologist, but that's kind of how I imagine it.
No, yeah, I mean, you're kind of spot on there. And there's a few other things that you look for. I mean, in your drilling, you want to look for veining, you want to look for porphyry clasts that are maybe being pulled up into the upper parts of the system. And then the alteration minerals, as you said, the potassium alteration, but even within the high sulfidation system, you can look for higher temperature associated minerals that are, reflective of higher temperature upflow zones. You can look for different mineralogy as well, even in the economic minerals, like for copper, for example, at the bingo zone, we see typically energite, covellite, whereas elsewhere in the project, it's typically bornite, chalcopyrite. And at bingo, those two minerals are more indicative of the deeper, higher temperature parts of a high sulfidation system, implying that you are closer to that heat engine or porphyry source. So I don't know where we are relative in that profile, but what you want to do is basically try and piece all these little things together and come up with better, more refined targets, as you said.
Okay. Would the fact that you have that type of alteration on ranch and then a different alteration on lawyers, would that complicate production in any way? Like, would you have to have 2 gold circuits and 2 silver circuits or something like that?
So it's a great question. And on the lawyers project, the flow sheet right now is extremely simple. It's basically gravity, a whole ore leach, and then there's a metal crow circuit on the end that helps with silver recoveries, and then doré on site, basically. With the addition of the ranch project, and we have a big study underway right now that's looking at how we combine these two. But the main change is going to be the addition of a flotation circuit, and that will effectively deal with all the sulfide content. So it's basically removing the sulfide content from it. What we're trying to determine is the best way to process the combined ore. Do we blend it? Do we batch it? After the material goes through the flotation circuit, there would probably be a high intensity leach on the concentrate and then leach on the tails as well, with the idea of still pouring as much doré on site as possible. So it'll still be a pretty straightforward circuit. And one thing that you maybe noticed in the new resources that silver recoveries are at 88%, and that has come up a long way from what they were in the PEA. And that's because of the flotation circuit. We don't have final results yet, but from our metallurgist, it's improved significantly because of that. And that'll have a material impact on the economics as well, because as you said earlier, the silver accounts for 25% of the resource value in terms of gold equivalent ounces. It's about, we have over 90 million ounces of silver on the lawyers project. So that's a lot, but that's bigger than a lot of people's silver projects. So it's an impressive number that often gets overlooked.
Yeah, for sure. And with depending on, and there's a whole nother conversation, of course, but depending on the macro situation where you think gold and silver are going, if silver starts closing that gap to gold, it's going to start becoming a larger part of the resources. So that 88% becomes more and more important over time.
That's exactly it. Yeah.
You're also doing some more met work this year, though. What exactly are you targeting the silver in any way, or is it mostly gold?
No, very much so looking at the silver, yeah, and it's really just looking at the, how we blend the two projects basically, and that work will be complete by probably the end of May, early June.
Oh, okay, so very soon, basically. Okay,
yeah.
good. And then you're gonna have results out. What kind of results? It's basically recoveries that you're gonna be communicating to the market.
Basically, it'll be recoveries, yeah, and then potentially what the flow sheet would look like as a result of that improved recoveries.
Okay. Yeah. It's already moving in a very serious territory. I mean, over a couple of years, this has moved into like an exploration company to moving now to optimizing this for a mining operation. Getting to the PEA eventually. Which zones do you hope to include in the PEA?
I think basically everything that you see in the resource is going to be in the PEA. So Duke's Ridge, Cliff Creek, AGB on the Lawyers project, both open pit and underground. And then on the Ranch project, it'll be the Thesis structural corridor, which is made up of Thesis 2, Thesis 3, and Bingo, and then the Bonanza and Ridge system. So the combination of those 5 deposits at Ranch.
Okay, so you're not excluding any of the lower grade zones or something that you've been coming up with. It's just basically everything that we see on here.
Yeah, exactly.
Mm.
And I think the ratios will change quite a bit, depending on what's going to be included. For example, in the resource, there's on the lawyers project, for example, I think it points to there being, can't remember the numbers off the top of my head, but let's say 250,000 ounces. And that is because with an 1850 pit shell, the resources tries to pull everything into that qualifies as economic. But once you apply actually capex to that, once you start doing some trade-off studies, once you consider the economics, I think the base of those pits are going to come up a lot, which will improve the grade, reduce the strip, and more importantly, focus on what will be a much higher grade underground resource that will effectively feed the early years of the mine life. So I think all the zones will make it in, but the relative ratios will change.
Mm. Why I'm asking this is because and I'm trying to bring up the news release so I can see the exact date. There's this news release from the beginning of February, must have been February 1 or something along those lines, where you zoom in on Thesis 2 and you're showing that's a 19 meter of 10.4 grams, right? So those are already higher grade zones basically, and it's not the same everywhere. So basically what I'm thinking about the PEA is, okay, good, you're including all these zones in here, but how much time do you spend on understanding the lower grade stuff versus how much time do you spend on understanding the higher grades? I don't know if I'm making any sense here.
No, that totally makes sense. Yeah, I know what you're saying. So and you can see that in the resource alone. And in the resource is a sensitivity table in the press release. And specifically for Ranch, I think that's a good example of what you're talking about. So the cutoff grade for the open pits is 0.4 grams. And I think that gives us what is in the pits is, let's say, 650,000 ounces, for example. If you increase the cutoff grade to about 1.5 grams, which you can see is the last line in the sensitivity table, that increases the grade from about 2 grams up to about 3.2 grams. And you only lose about 100,000 ounces. So what that is pointing to is that, there's a very high grade core zone to the Ranch project, and that will effectively be the starter pit. So that it's ignoring the 100,000 ounce material, which is, between 0.4 and 1.5 grams, but there's a very high grade zone in there that equates to about 500,000 ounces combined at over 3 grams. And that will be a big focus of what the PEA looks at. How do we evaluate what the starter pits are going to be? How many ounces are in the starter pits? And that is along the same vein of what we talked about earlier with on the lawyers project. That evaluation will be more to do with what makes it into underground versus what's in the pit.
Right. Okay. And okay. And that's going to become clear in the PEA basically. All of this. Good. Well, knowing all of that then, and what you're seeing in this updated MRE2, what do you think the combined potential of the two would be long term eventually? Because I've heard somewhere, could have been you, or could have been a guess online, but 7 to 10 million ounces. I've heard it being thrown out there. Is that still the expectation? Is it reasonable? How do you look at that?
I mean, I think that's pretty reasonable, and I've said that before. It's a tough question to answer because it's obviously very far looking, but we're just shy of 5 million ounces right now, and at Ranch, in my mind, we're really just getting going. And of that 40 square kilometer epithermal field, we've only tested a fraction of it. Do I believe there's just as much potential at Ranch as I see at Lawyers? Definitely. And there's 4 million ounces at Lawyers. So I think over time, this district will evolve into something very significant.
Is this more of a guesstimate basically? Because there are two different systems as we talked about, different structural controls, different alterations. They're just two different systems, so they don't necessarily have to be the same size basically. So where's that coming from, that 7 to 10 million ounce?
It's basically the footprint of the alteration. With high sulfidation systems, there's a very good correlation between the footprint that you see on surface of alteration and how many ounces you have in the ground. And if you look at our new presentation on the website, there's a slide that demonstrates that. So the ranch, and it's to scale. So you can look at the alteration footprint at ranch and you can compare it to other known deposits that they've mined around the world. And you can see how many ounces exist in those. And I think that's in part where it comes from. It comes from that. It comes from all the work that we've done over the previous years in terms of geophysics, mapping, geochemistry to basically delineate the targets that we have on the project, in addition to the fact that all the zones within the resource, they remain open for growth. So very much a starting point with a lot of targets to continue testing.
It's a good point that you brought up the presentation, which I've opened up here for myself. This might sound unrelated, but then eventually it might make sense too. But you're currently working on an updated idea of what an updated mine plan, basically, with the different circuits and what we just talked about previously. But then also you place a potential future mill between the AGB starter pit area and the Cliff Creek and Duke Ridge starter pit areas. Would that still be the case? Could there be something beneath it so that you basically have to have the mill someplace else? Is that part of the studies that you're doing right now? How do you look at that?
I think for the PEA, you won't see any change there. I mean, and ultimately going forward, you may never see a change. It might end up just being that's where it stays, and for a couple of reasons. One is obviously very proximal to where the larger masses at the moment being lawyers, and that may change over time and shift towards ranch. But for the moment, it's pretty centralized. The other positive is that, and you can see it in the topography and the images in the presentation, that it's basically through this whole area, you have these big flat plateaus with rolling valleys between them. And so very favorable topography for working, for building, for construction, for tailings, for waste dumps. It's logistically a very simple place to work. The other nice thing is that ranch to the north, it's about 30 kilometers away there north, but it's, most of that, in fact, pretty much all of it is either flat to downhill. So the concept is that we have a centralized milling facility, and then we have a kind of hub and spoke type model where feed is coming from different locations. One of them being ranch, where the trucks are basically going to be driving along flat ground to downhill the whole way, and then a couple of kilometers uphill at the end. But using topography to our advantage here very much so that when they're hauling, it's downhill and conserves gas, and then on the way back up, they're empty. And ultimately, that's the concept that you'll see in the PEA, but we're also looking beyond that to, does a conveyor system work here as well, because it's gravity driven.
Yeah.
So,
do you have an idea? I want to look it up, how much gas mining trucks use. How much in savings that could end up bringing? Yeah, I'm just having it. That might be an interesting exercise to do for myself. It says that on average, the mining truck will need 114 liters or 30 gallons to keep running per hour is what how they calculated. Any idea how much less that's going to burn?
I don't know. I have a trucking cost that our engineer, Ian, our COO, he's told me this many times, and he'll be embarrassed for me that I can't remember, but I can't remember off the top of my head.
You don't have to. You're far too well. This is just a general curiosity question. Nothing to do with this. It's too early. This also might be too early, actually, but a good point nonetheless. How much production are we talking about here eventually once this is in operation? Like, would 200,000 ounces per year sound reasonable? Does it sound too much? How do you look at it?
So the previous PEA was looking at 160,000 ounces a year, kind of life of mine. First couple of years were probably closer to 200, but it had a weird production profile. And that was one of the real opportunities that we saw here. It was very rear end loaded. And part of that was because all the better ounces were at depth on the lawyers project. So now I think what you potentially see is that, and certainly what we're targeting, with a much better conversion, a much bigger resource, looking at underground potential as well, that we're going to come up considerably from the 160,000 ounces from a previous life of mine. So, I mean, you can just look at the resource difference there, and that'll push out the life of mine a bit, but also our ounces are going to improve substantially.
Okay. So this is yeah, so 200,000 does not sound unreasonable. If anything, might be on the lower end. That's what I'm reading out of it, but I'm not going to put words in your mouth, and I'm not going to make you say it because you're not allowed to. I'm allowed to read whatever I want to. Uh, the stock has nearly doubled over the last couple of months, though. You no longer have material non-disclosed information, as far as I understand it. So, any plans to take advantage of that and do a capital raise anytime soon? Do you need the money? How do you look at that?
Um, so we're in a pretty good position at the moment. We don't have enough capital in the bank, obviously, to do a summer program or to see us through to the end of the year. So just to be frank, we will have to raise capital at some point this year. But I think strategically we're in a good place. We're not down to our last nickel and dime in the bank, so we can be pretty selective about when we actually raise capital, and that will effectively fund program in the summer and ongoing baseline work for the rest of the year. And yeah, I mean, you bring up a good point as well that our share price has effectively doubled over the last few months, and I think that goes, or I think some of that is because one, we were oversold and we were very cheap relative to our peer group. We've got major catalysts coming up this year. The MRE being the first part of that, with the metallurgical work and the PEA coming. So people are positioning themselves ahead of those milestones. And on top of that, I think as the gold space wakes up, as retail comes back, as some of the big funds start to get inflows again, we are one of the safest options to come back to, because we've got verified ounces in the ground, significant resource with a very good economic foundation that we're only going to build on. So I think that's in part envy. That's my take on why we're seeing a very strong upward trend, and hopefully that continues.
Not all gold stocks are up, and that's something I talked to Lobo Tiggre about, where he says that some things are cheap for a reason, and
Yeah.
some things go up with the price and with picking up M&A and all that. When you eventually raise capital, would you be looking to just do traditional financing, or do you think this is a point where you can start looking for a strategic partner? Do you want one? Do you need one? Tell me more about that.
Yeah, I mean, it's an option for sure. And I think we evaluate all types of opportunities in terms of capital raises going forward. It's just trying to determine what our objective is for the next summer program, but also we've got a lot of meetings ongoing at the moment where we're trying to strategize on what our plan is, what our bigger plan is here going forward. So not only for the summer, but what do the next 12, 18, 24 months look like? And, those are all factors that play into, what a potential financing looks like this year.
With M&A picking up, actually, that I just mentioned, and I'm thinking about it, are you seeing more pressure or interest to I guess participate in M&A, regardless of the side you would be on that equation, the M or the A or whatever? But are you seeing more interest in that?
I mean, I think the reason that we're seeing a lot of M&A picking up, but in my mind, that what the M&A is picking up at the moment is at the very kind of highest levels, where it's producers or very near producing assets, where they've not been as affected over the last couple of years, and in a kind of a depressed market, where they can point to improved quarterly earnings based on the current gold price, and those mergers make sense. At our level, our stock price, even though it's doubled over the last few months, in terms of the ounces that we have defined in the ground, I think we're extremely undervalued. So I don't see anything happening here. I think we anytime soon. I mean, I think we've got to really demonstrate what the potential of this project is first. And I think the MRE is the first step, but there's a lot more upside here that we're going to be able to unlock over the next months to years. And yeah, sorry.
No, go ahead. No, go ahead. Something else.
No, I was pretty much finished anyway. But I think in terms of like M&A at obviously when assets are cheap, it's also a good opportunity to pick other projects up.
It's also, I'm thinking about that 80% of conversion that you told me that you're hoping for to go from Emory into the PEA. There's also a difference when you if people like that valuation metric and want to value projects based on ounces in the ground, ounces in their ounces in an MRE are not valued at the same price as ounces in a PEA. Typically, ounces in a PEA are valued higher during M&A transactions, as far as I understand it. And with the target that you told me about eventually bringing this in the 7 to 10 million ounce range, if you're still running this company at that point, what kind of valuations do those projects or could those projects fetch on a per ounce basis here in this region?
I don't know, to be honest. I mean, there's so many different variables that play into that at the moment, that it's a tricky one to answer for sure. Yeah, I, I couldn't speculate with the time horizon, with changes in gold price, with political changes. The one thing I would say is BC is a fantastic jurisdiction, and it's really nice to see Newmont come out recently and say that they're keeping all the Newcrest assets. They're doubling down in BC. They think they're going to be here for decades. It's a really nice stamp of approval and a fantastic jurisdiction where you can actually build and put mines into production. And I think we're going to continue to see that trend, where producers are looking to de-risk their portfolios and move to jurisdictions where you're not going to get your projects yanked. And what that does for us is help increase the value of the ounces that we have in the ground. So
you also have a new board member, which I might like to, if I was a gambling man, I might like to speculate that might have some connection to potential M&A here. Is that too much of a speculation or something you're willing to entertain?
yeah, so the new board member is Bill Little, and he's come on as a non-executive chairman, and he's the current COO at B2 Gold. And so, just to be clear, Bill has joined Thesis as Bill Little, nothing to do with B2 Gold. And he's a fantastic addition to the team. He's an engineer by background. He's built all of B2's assets, sorry, in West Africa. He's now kind of leading up the charge for developing Sabina's asset. And with that wealth of experience, I think he's really going to help us bridge the gap here as we transition from advanced stage exploration through to development and avoid a lot of the potential pitfalls that some juniors fall into, and really kind of help cornerstone the team as we continue to build it out here.
Mm. And I understand that's the official stance, right? But Bill Little is Bill Little, right? He works with B2 Gold. Whether he officially joins Thesis as part of B2 Gold or not, as you told me, up to you for interpretation. But that connection is still there, and speculations are going to exist in the market. What do you basically think of those speculations? Is what I'm asking here. Is there any merit to it? Is that even a potential leeway that you can go into? How do you look at it?
I mean, I can't really comment on that too much. I mean, there's, I mean, occasionally I'll jump on some of these boards and read the comments and the theories, and there's all sorts of wild speculation. So I think no matter whether it's Bill or B2 or somebody else, there's that speculation always exists. Yeah.
Yeah, fair point. I'm pushing it too much as well. There's not much you can tell me, but I appreciate a little bit of back and forth here. Yeah, I think I've gone through most of these things. What else am I missing though? What else is in this news release that I haven't brought up?
I mean, I think we've covered all the highlights here. I mean, to me, the the big thing is that we've got 4 million ounces of M&I in the ground. There's a lot of confidence in this, and 700,000 ounces have been inferred at a better grade, and there's a huge silver component to that, as you said as well, which I think as we go forward, if we do see that ratio between gold and silver change, we're going to get a lot of torque out of that silver component and future economic studies. And then just to reiterate, I think very much a starting point here. It's a fantastic deposit. It's grown substantially. We added 1.2 million ounces to this resource from the previous one, and those are very valuable ounces, I think is what the key takeaway is. You know, they were part of that strategic plan that we've talked about before, and they're certainly delivering. I think you see that translate in the PEA when it comes out in the fall. And there's a lot of potential here to keep expanding on what we have.
All right, well, thank you, Ewan. Obviously, I'll be following along with whatever's happening here. The PEA is going to be an interesting part. Congratulations on releasing this MREA. It's a good what I'm seeing here. I'll let you drop off now, as I will be traveling even more to the north from here, to the Northwestern Territories of Canada, specifically close to the city of Yellowknife, on the shores of the Great Slave Lake, where I'm talking to Gerald Penaton, the CEO of Gold Terra Corp, also a gold exploration company, and also a paying client of Resource Talks. Gold Terra is listed as YGT on the TSXV, where an average of about 200,000 shares trade each day, with a 52-week high of 12 cents and a 52-week low of 4 cents. With 281 million shares outstanding and a $20 million market cap, today this is a 7-cent stock. I'm not doing a full overview here because I've done one in the past and I've had many interviews with Gerald. So for newcomers, I would recommend watching those videos because those are typically a good overview of the company in full, where Gerald answers some tough questions in those, and hopefully he'll be answering some of those in here as well today. But in a nutshell, this is a large area play, with Gold Terra holding 918 square kilometers of contiguous land surrounding the city of Yellowknife, as mentioned earlier. And they aggressively consolidated this land package to target further exploration and expansion of the Campbell Shear, where about 14 million ounces of gold have been mined from historically. And Gold Terra now holds an option to acquire 100% of about 70 kilometers of strike on that Campbell Shear, with the caveat that they'll have to define a 1.5 million ounce deposit at minimum and make an $8 million cash payment, the former of which they plan on achieving by drilling deep holes, which also will be the focus of the conversation today, because they're drilling a very deep hole right now. But first of all, Gerald, you've just closed a financing, $2.5 million with a lead order from Eric Sprott. No warrants. This is not typically the time in the market where you see financings being done with no warrants, a big lead order. Like, how come? How did you get him to invest with you, basically?
Well, first of all, I think Eric made money with the Detour story back in the early days of Detour. He was a shareholder through High River Gold, which was a shareholders of Pelangio. So I think Eric has known me for quite a while, and what I can achieve in terms of validating a property. Why do I go on this property? And why do I look at stuff? One of the things that I know Eric likes is high grade. It's a high grade story. And just to correct you a little bit, we don't have an option on 70 kilometers. We have an option on barely 5 kilometers of the 70 kilometers with Newmont on the Con Mine, which is a brownfield project with valued of more than $100 million in terms of infrastructure right in the town of Yellowknife. So there's a big advantage of the Con Mine option. We own the remaining 65 kilometers of the Campbell Shear, north and south of the Con Mine, about 50 kilometers north, 20 kilometers south. So we do have a position in the camp that control what we call the plumbing system of all the gold mineralization in the Northwest Territory near Yellowknife. It's a big structure, very similar to any other Archean greenstone belt in Canada, such as Timmins, Val-d'Or, Kirkland Lake, Red Lake, Hamlo. These are the structure that you're looking for if you want to explore for gold in Archean greenstone belt in Canada.
Okay. Talk to me about that financing, though, with the $2.5 million, no warrant. I understand Eric Sprott basically trusts you from the past. Good. How do you get this done with no warrant? And I don't mean to blow any smoke. I'm just actually interested because of a recent bad experience that I had with a company I own that did not so great financing. You do good financing, no warrants. I like no warrants. yeah, again, how did you get it in? Did you give him a discount? I mean, is this too cheap, or are you giving those shares away too cheap? Well,
Well,
why is
there
he?
was a discount. There was a discount. The discount is high. I mean, the stock was trading 6 cents, 7 cents. So you look at the 6 cent stock, you give a discount of almost 15%. So there was a big discount on the deal. And sometimes you have to make the deal happen a certain way. You know, I've done financing over the last almost 20 years now, since 2006. Before that, I was working at Barrick Gold for 12 years. Didn't have to play too many role in doing the financing for Barrick. My job was to finance us. Every financing can be difficult because there are many components to it. Whatever it's the timing, whatever it's the gold price, you got to be careful. Whatever it's a discovery hole, something like that. And the timing of different situation. I mean, building Detour was in a very good period for the gold price, which I think we're just about to live through again. I'm extremely positive about. I've always been positive about the gold. For me, gold is something you buy and you park. And when you look at Gold Terra, Eric is very knowledgeable of the Canadian platform, the American platform of gold exploration. He knows you can find a lot of value into some investment. I don't have the deep pocket of Eric, but the relationship is not necessarily a relationship that is there every day. Eric doesn't call me for advice or things like this, but I think I do have shown over the years that I know exactly where to go and buy gold. And even the Newcastle story was a great discovery or rediscovery of an old mine, Castle Mountain in California, when I worked at Newcastle Gold in 2016-17, which was purchased by Equinox in the fall of 2017. Financing are tough. If Eric's joined as a lead order, that's because he see something that I also saw, which is high grade, potential, Canadian story. And you don't put a warrants on a 6 cent stock. Why would you? I would not even put a warrants on a $10 stock, because warrants just is a ceiling. You want the stock to run. I'm not a warrant person. So when people call me, some people don't call me because I don't do warrants. Okay. I restrict myself to investors that believe in the story without a warrants. It's a philosophy. For me, a warrant is a bad thing. Like flow through in Canada, flow through is a bad thing. I wish there would be no flow through in Canada at all. Zero. Because
That's a strong
people
statement.
buy it for the tax purpose. They don't buy it for your story. They'll be a lot more selective if people were buying for the story versus a tax break or warrants.
That's a big statement on flow through. I know a couple of people will disagree. I also recently interviewed.
I don't care. I don't care. I build Detour without flow through. I work and why would investor in Canada invest everywhere else in the world with no flow through? But when it's home, when you can be supportive of home exploration, oh, there are no flow through, I'm not investing. I'm going to go somewhere else. Okay, go somewhere else.
I can appreciate the attitude for sure.
I know it's not a very nice attitude that I have now. I know it's an attitude of bluntness. I understand very well. And I respect people who wants to do it a different way. I just do not believe in flow through and warrants.
Well, I would typically push back and say like, okay, but then the pool of capital would be smaller. But then at the same time, again, you got Eric Spront in, so there's not much for me to push back on. Do you expect what's that conversation like? Like, do you expect him to keep coming back next time you have to do a financing? What was the conversation you guys had?
The conversation was mainly, about the importance of what we're doing in Yellowknife, which is exploring for a high-grade gold deposit. I mean, the average grade of the Yellowknife camp is 16 to 22 grams. 22 grams at the giant mine, 16 grams at the Con mine. we need 10 grams. But do you realize what is the value of 10 gram in today's gold price? It's $800 US a ton. We do mining in Canada for $200 a ton. I know price has been under pressure, costs have been under pressure, and maybe it's not $200 a ton anymore to do mining, but the value of 10 gram, recovered 10 gram, or even 8 gram, use 8 gram. 8 gram basically give you a value of $640 US per ton. So the valuation of what you have in the ground is, gold Terra is currently valued at $10 an ounce. When I purchased Detour Lake in summer 2006, when I negotiated the purchase of Detour Lake in August 2006, I paid $50 an ounce for 1.5 million ounces. And I signed a deal for $75 million purchase for ounces that were on a mining lease, and it was mainly low grade, and what was left over from Placer Dome days when they shut down the mine. And I still pay $75 million. Our market cap today, with 1.7 million ounces, or almost 1.8, is barely $10 an ounce. So there's a disconnect in valuation. And Eric sees that. Eric will probably invest in not just Gold Terra, but in other stories that are high grade. High grade stories are will go through tough gold time and will make money in both bad time and good time, because you got the valuation there. You also spend a lot less money to build a mine. I mean, look at the low grade deposit. 60,000 ton per day Detour was 1.5 billion, and the 45,000 ton per day, or even less, at Côte Lake is over 3 billion US. The payback is what? 7 years, 6 years? I don't know. I mean, we are living through very good gold price, $2,300 plus. We're setting new floors. Gold price is not going to go below $2,000. So we're very, very lucky to see that future going up. And we just have to put ourselves into the right story, because there will be valuation being upgraded in the future. And because gold price is not going any lower.
I do want to talk about grades later on, or just in a minute here. But can you first walk me through what the $2.5 million will be used for, and how you think you're going to split it between G&A and drilling and all the rest?
Well, there's one component that will be changing back in June that we could have used, the charitable flow through, which is a very good aspect of it. But with the new ruling, the benefit from investing, the margins goes from 40% down to pretty much nothing, 10%. So we're going to be losing that in June. And that's going to be affecting a lot of the exploration play in Canada, especially. When I decided to do a private placement earlier this year, we had the discussion at the board level with my CFO, Mark Brown, and then we basically look at the picture and we said, we need to do hard cash, because every time you do flow through, your hard cash is very small, and then the company has problem surviving, right? But when you do hard cash, you can buy time. You can have $1 million of hard cash that gives you, with our burn rate, it gives us like 12 to 14 months. We're so lean at Gold Terra that we pay, for example, our CFO an office accounting filing for $10,000 a month Canadian, $120,000 a year, with a part-time CFO, a full accounting, full filing, plus an office in Vancouver. You can be, when I joined the company 4 years ago, we had an office that costs $10,000 a month alone. Look at the progress we've done in 4 years to cut back on the G&A. So we're less than $1 million, including everything, company. But you still need to go through. You still need the ticker to be alive. And then the rest of the money goes towards drilling. And are we going to raise money again? For sure. It's a junior company. We need to raise money once or twice. The last year we raised money was May last year. And we just raised money a year later in April. So we're not raising a lot of money. And sometimes you need to raise the money, otherwise the tickers needs to stay alive. The company needs to stay alive. And lucky enough, some people will tell me you shouldn't drill. You should just park everything. It's more dilutive, no question. It hurts. I had to cut back myself from that private placement. I wanted to buy 1 million share. I end up buying 240,000 share because I had to cut back myself to let shareholders that wanted to participate in that had shown their interest earlier on. Shareholder from Europe. We have shareholder, very good shareholder in Europe, and we want them to stay in and be able to average down. It's not pleasant to do a deal at 5 cents. If you had asked me that 4 years ago, when the stock was 35 cents, 36 cents, my first 1 million share bought in the company was 1 million share at 36 cents. Okay. And this time I could not even average down or help myself going down. My average is 7 million share at 25 cents.
Okay.
So, but what did we do with the financing? We brought a lead order from somebody who knows exploration, who understands the Canadian platform, who is there for the high grade objective, and he's a supporter. What the press release doesn't show or say is that our shareholder, like Mackenzie Fund, which is one of the best exploration resource fund in Canada, if you know of them, Ingalls Snyder from New York, long existing shareholder, has participated in the deal and maintained their position at 8%. So we have very good support in a market that is very difficult to adapt, and we're doing our best.
Let's talk about that high grade that you're mentioning here, because you recently announced some results, specifically mentioning that you've intersected the Con shear with the hole that was targeting the Campbell shear below the historic workings of the Con mine. So that's well, it's already confirming the geological thesis that it's there, but grades and widths of the intercept of the mineralization you intercepted here are not high. It's also, well, there is a 0.5 meter of high grade, but it's relatively narrow. Is that,
you have to take this in a different, you cannot say it's the Con shear, first of all.
okay.
It's when you drill near shear zone, you can do that in Val-d'Or. I remember hitting mineralization in the batholith of Bar-Lamac, which is north of the Cadillac break and the Sigma mine. The Sigma Val-d'Or, given an example of a gold camp. Sigma Lamac is one deposit. That is probably 15, maybe 20 million ounces altogether. North of it, there's a batholite called the Bar-Lamac batholite with small deposit in the range of 1 million ounces at 7 to 10 grams. And you can hit mineralization everywhere, like we just did while we were drilling our depot. We're not in the Con shear yet, okay?
Okay.
Con shear is here. We're just basically hitting the Con shear, which produced 1 million ounces at 20 grams. What we hit and announced in that press release are little quartz veining in the batholite, somewhat may be related to the gold system. We just released them because we hit them. You have to disclose. But they're nothing. We're never going to go after that for mining. What it tells you is there's gold everywhere. So you got the Con shear and the Campbell shear that are dipping to the west on the Con mine. 1 million ounces at 20 grams, 5 million ounces at 16 grams. The Con shear was stopped at 600 meters vertical. The Campbell shear goes down to 2,000 meters. Do you think there's no potential here? So when we intersected our Con shear at, say, 1,300 meters vertical, we just demonstrated that between what was mined and 1,300 meters, you got a window where you can have another 1 million ounces at 20 grams. The result of the conch shear will come out sometime in May when we get the result. But the fact that we intersected the conch shear and a 2 meters quartz vein right at the contact of the shear zone is good news. But what we intersected just above are kind of like flat veining, small veining. They're indication that it is pregnant, that is a good system that not just was in a shear zone, but break away and infiltrated the host rock.
You also mentioned in that news release, I believe, that there is variations in the densities of those quartz veins that you're talking about here. How are those? How's that variation gonna impact the distribution of mineralization? Does it have any implications for future drilling? How do you look at it?
Your question is very accurate. When the density of quartz veining increase, you should expect to be closer to the shear zone. So what you're looking at, a shear zone, is a brittle formation like this, right? It has move and move over the years. And what you see in a batholite nearby is crack opening and fluids going in. The problem with those type of veining is that they're small. It's very difficult to build tonnage. Unless they're very, very close to the shear zone, you will not go 200 meters and drift 200 meters at a cost of, say, $10,000 a meters. You're not going to spend $2 million to go after a small vein. What you need is volume. What you need is something that is steady, that is very continuous. Whatever it's 3 meters, for example, what we do in mechanical mining is that we use 3 meters because that's what the mechanical equipment needs a drift that is not 8 feet diameters or square, but about 10 feet. So what we want to do is always find about something that is about 3 meters or 10 feet wide, that has very good continuity to go vertical long hole. But when you get into a vein like this, like the flat vein at Sigma mine, were mined under room and pillar. We call it room and pillar. We had to leave pillar, and the vein were 20-degree flat. So basically, you could go from the top of the stope and there, but everything doesn't fall with gravity at 20 degree. You need to rake them down. So there's a lot of work to do, and you need to be able to have enough gold for that. So when you see just this little vein, unless they're very, very continuous, and you're not going to target that, what you're targeting is a system that is 1 million ounces. Say. That's your target. Our target at depth in the Campbell Shear that we're currently drilling. So 2 weeks ago, we released the press release. We said we were around 1450. So let's say we're 1750 today because we drill about 30 meters a day, roughly. So eventually we'll get to 2,700 meters, which at 30 meters a day will be in 30 days, 40 days from now. We're going to hit the Campbell Shear. That intersection is 600 meters below the underground working. You prove the system, say it's 10 meters wide, 10 gram over 10 meters, or 15 gram over 10 meters, right there, and you're 600 meters. What is the value between the underground working and that intersection? The reason we're doing the deep hole is that we want to generate a target that has a value of at least 1 million ounces of gold. That is worth drilling it. Because it's going to be worth mining it.
That's a very good point, because it's going to be worth mining it. You're also going to have to know about the metallurgy before you know if it's worth mining it. Talking about arsenopyrite or any evidence suggesting that there might be challenges with that.
Below 1,000 meters at the con mine, it was free milling. NERCO was achieving 95% recovery. There's very little arsenopyrite in the lower part of the con mine. That's why our target is so spectacular for that reason. Instead of having to deal with refractory ore, which was the giant mine and the upper portion of the con mine, 1,000 meters below is free milling. Look at the presentation. We have a slide showing a stope that was not completely mined, which probably have maybe 2/3 of the ore left with grade up to 535 grams over 20 meters. Look, I looked back at the log. In reality, it was 2,000 to 3,000 gram over 3 meters. That's what we call a jewelry pocket. You're not going to repeat a jewelry pocket. It's very hard to repeat very, very high grade zone, but they do exist. And there's at least 4 locations on the con mine below 1,000 meters with jewelry pocket. So we know they exist on the con mine. And are we going to hit a jewelry pocket at 2,600 meters vertical? I don't know. But I can tell you one thing. I know that the potential, the Campbell Shield will be hit. This is 100% success. And hopefully with all the wedges that we're going to do from the deep master hole, don't forget, this is a deep master hole going down to 2,700 meters that will be used to wedge up and cover the 600 meters that is open between the underground working and the intersection of the Campbell Shear at 2,600 meters. It's a great target. It's an expensive hole, yeah. But you know, we've been working on the con mine for 2 years. We've already outlined 540,000 ounces near surface. So we have the first 5-6 years of the mine covered at 1,000 ton per day. And we plan next winter to go back and extend, and maybe we're going to get to 750,000 ounces, 1 million ounces. But to open a mine, I need 2 million ounces, say. So where do I find the next 1 million ounces? And that's why we're drilling this hole below the mine. It's a strategy that is make common sense. If I want to buy the con mine, I need to find 2 million ounces to build a mine and purchase the mine from Newmont. If I don't have 2 million ounces, I walk away and I go back on the rest of the Campbell Shear, which we control 85% of the camp.
Yeah.
But the con mine is a brownfield project. It's a mining lease. So the parallel with Detour, how did I build from IPO to gold pour, including 26 months of construction? In less than 6 years, I go from IPO to construction. When people talk about 15 years average to put a mine in production, 10 years, 15 years. How did I do this? That's because I had a Detour Lake mining lease. Similar to the con mine mining lease that I'm trying to evaluate to purchase to allow me to skip some permitting steps. Because it's already a brownfield project, industrial site, with more than $100 million of infrastructure, excluding the shaft that goes down to 2,000 meters. This is probably one of the best infrastructure in town, high-grade gold story in Canada. And it's just completely under the radar.
Yeah, and when you say infrastructure, you also mean the shaft that is in there, just the mining infrastructure, not necessarily the streets. I also
but
want
power, think about it. I have a water treatment plant and a pond. How much do you think it costs to build a pond and a water treatment plant today?
I don't know, definitely a couple of $1 million.
$75 to $100 million.
$100 million?
Correct.
I wouldn't have guessed that.
Well, the plan was built in 2015, so 9 years ago, at a cost of 20 million US. Just the water plant, just the treatment plant. So when I dewater the mine, I don't need to install a water treatment plant. It's already there. There is at least, what do you think costs a warehouse? Which is probably somewhere like more than 10,000 square foot on 3 levels.
I'm making a note to
myself.
myself.
$1 million? No.
Yeah,
it probably costs somewhere between 10 to 20 million dollars. Those infrastructures, if you build a mine somewhere else, it's going to cost you that. The only thing missing on this property is a mill. Power's there.
Yeah. I just made a note to myself that I should get into water treatment plant buildings. If they cost $25 million, I might make a lot of money there.
You want to know what I learned last year?
Tell me.
They're building a water treatment plant for the giant reclamation plant in Yellowknife.
Okay.
I don't know how big the water treatment plant is, but the mine was not bigger than the Pecan mine. You know what the quote was to build the water treatment plant for the giant mine?
How much is it?
400 million Canadian.
Well, that seems impossible. That's like an impossible.
I could
amount of
not
money.
believe it. Okay, Antonio, I could not believe it. But this is what I was told last November when I was there.
Yeah.
So when I look at the cost of our water treatment plant in 2015 and what it costs today, and you know, people I've seen costs go up to build things. It's crazy.
Yeah.
Cost of building, even cost of houses, right? Today, you know, we used to build a house for $100 a square meters or a square foot, sorry, a square foot, which is about will be 10 times, so $1,000 a square meter. And I'm sure in Europe you have the same type of, you build a house, how much it's going to cost per square meter. We have it for square foot here, and it's not the same anymore.
Yeah, no, for sure. Definitely not the same.
Look, the advantage of Terra, having a brownfield project, having infrastructure, being in town, everybody goes home at night, focusing on high grade mineralization, which means I'm not going to invest billions of dollars to build a mine. There's a lot of good thing going forward into Terra. So when you look at our current valuation at $10 an ounce, it's nothing.
You also have the lithium thing that you mentioned in that news release. Although there was a part on the lithium project. What's happening there? Are you including that in evaluation? Thinking of doing something else with it?
For me, lithium is not my bag, but I understand very well the value of lithium. So we did a deal last year with Midas. Midas spent $750,000 in 2023 exploring our property, part of our property, excluding anything that if they find gold, it's ours. So they were only having an option to learn to gain interest into the lithium and some critical minerals, excluding copper, nickel, and cobalt. So probably something similar. Now that Midas is out, we've already had a couple of companies that are interested in our land position to explore for lithium. They made a nice discovery of lithium in the Quita Belt, up to 4% lithium on one of those pegmatite. So we think we have a great potential. So we're very cognizant of the potential of critical minerals on our property. We just don't have the money to work everywhere. There are some people that are specialized in lithium, so we talk to those people. But we keep a foot in the door.
Right. Okay. So no immediate plans to do anything else with it, monetize it, or any other options?
We will monetize it with, now that our partner Midas decided to withdraw, we're already talking to other people to come in.
Okay. But you don't want to completely let it go off your hands?
No.
Okay. Fair point.
Always keep something, either a royalty, either an interest. For example, the deal with Midas was up to 80%. So we were keeping 20% without putting a penny until construction.
Yeah. So you're looking for a comparable deal.
This is the kind of aspect. We don't take any risk, but when it gets built, we have an option to contribute.
No risk, a little bit of upside. I can see why you like that. When releasing assay results over the next couple of months, in that news release, you said you have assays pending for 875 meters depth to where you are right now, which is now almost 1,000 meters. How are you going to release those assay results all at once, batch it, meter by meter?
I think the main part basically is that when we hit the Campbell shear at 1,366 meters, between 1366 and 1405, this is where the con shear is in multiple shearing. So those results should come at once. They were sent to the lab maybe a week ago. After we hit the zone, by the time we saw cut the core and when we ship it, then we have the zone and we get the result probably sometime before the end of May. We should have the result for the con shear, and we'll have one press release on this. We're probably going to have a press release also when we hit the Campbell shear, because that's big news, 20 2,700 meters hole is not something you do all the time. And in following it in the Campbell shear, allowing another 4 weeks. So 3 big press release over the next couple of months.
Okay. When you're so you're how deep do you say you are? 1,700 meters, give or take.
We assume about 30 meters a day. So we've been drilling for 2 weeks since our press release, roughly, or 10 days, 10, 12 days. So we probably are somewhere around 17 to 1,800 meters as we speak.
Okay, so the hole will be done within 6 weeks, 4 to 6 weeks.
4 to 6 weeks, correct. 30 to 40 days.
Yeah. Okay. Yeah.
Assuming everything goes well. But so far, this hole has got, a couple of cementing place, and that's it. So we've been doing very well.
Okay. And what happens after that when you have it back? You see the assay results, you analyze them. Where do you go then?
We will be wedging on each side of the hole at the same elevation.
When?
Immediately after.
Okay, so there's no seasoning, you're not waiting for forest fires or anything like that.
Well, forest fire, it's not that you're waiting for them. If they happen and they evacuate the town like it did last year, last summer we lost 2 months. 1 month because of a operational mistake by Foraco, and the second month was the forest fire. So we basically didn't do anything from July 15 to September 15. But we were back in business in September 15 and finished the hole in November. But at the end of the day, we don't control forest fire, and hopefully a lot of rain will fall and no fires will happen in Canada.
When I say waiting for forest fire, I actually mean waiting for them for the risk period to be over. So I would have assumed that maybe now you're going to wait before you start drilling up until September or something.
We are right in the city on the con mine side. There's no trees surrounding the drill. There's 20,000 people living behind the city. If anybody had an interest of looking at our presentation, we show a beautiful picture of the presentation. And basically, I think on the next iteration of our presentation, we will show where the drill is sitting on the property.
Yeah.
And where it's drilling from.
Good. Okay. Well, this is clear. It's a clear plan. I understand where you stand. What am I not asking you here, Gerald? What am I forgetting to bring up?
I think you had some very good question, Antonio. I mean, look, this is a target of plus 1 million ounces below the mine. It could be 1, 2, and 3. And Archean deposit goes down for 10,000 meters. The deepest mine in Canada is the La Ronde mine in Quebec at 3,400 meters. We can mine in Canada down to 3,000 meters. The reason we're stopping at 2,700 meters is that this window from the bottom of the shaft, we can ramp down and achieve and get this. But don't forget that 1 million ounces is mainly to show that there's enough ounces to build a new mine, because we already have somewhere between 500,000 to 1 million ounces near surface that will be mined first, plus 650,000 ounces at a grade of 11 to 12 gram left in the mine. So there's a great potential to have a story that is somewhere between 2 to 3 million ounces on the con mine option alone, plus the ounces that we have to the north of town, 20 kilometers north of town, which will add another 1 million ounces. So everything becomes very, very important. The picture of the con mine site showing the con mine infrastructure is look, it's $100 million picture.
Yeah.
Without the shaft. Sinking a shaft at that depth, Antonio, today will be $120 million US. So the value of this project as a whole is more than $200 million. And the reason I'm doing this deep hole is because I know I have already an access that goes to 1,900 meters. And just to give you a perspective of time, it will take 3 years to get there if it was sinking a new shaft.
Good. Well, thank you, Gerald. You're doing interesting stuff there, deep holes and all that. I also appreciate your bold stance on flow through and all the rest. This is a very fun conversation. I'll let you drop off now, though. I don't want to steal your entire day. And I also have a trip to make. This is going to be a request from a viewer, actually, who's making me travel all the way to Peru and stop by Spain as well, maybe for a brief second to talk to Greg Duras, the CEO of Western Metallica Corp, a copper gold exploration company. And we're also going to be joined by Giovanni, who is currently in Peru, as far as I understand it. The company is listed on the TSXV in Canada under the ticker symbol WMS, where an average of about 75,000 shares trade each day, with a 52-week high of 8 cents and a 52-week low of 3 cents. With a market cap of about $2.5 million and about 72 million shares outstanding today, this is 3.5 cents stock. Add to that 23 million warrants and 4.5 million options, and that will bring you to about 100 million fully diluted shares. About a quarter, so that'd be 25% of this company, to be specific, is owned by management and directors, and the rest is float. Looking at the last financial statement, which is dated December 31, the company had about $2.5 million in current assets, most of which, so call it $2.3 million of which in actual cash, as well as some account receivables and prepaid expenses on top of that. The balance sheet also shows me that there is no long-term debt, but there is about $300,000 in current liabilities made up mostly by short-term account payables. That same financial statement tells me that Western Metallica spent, on average, over the last reported fiscal year, about $100,000 per month on what I would call administrative expenses and paychecks and stuff like that. As to project expenses, if we count the acquisition expense for one of these projects, they spent about $270,000 on advancing the project forward, and that's per month. So leaving the project to G&A cost ratio at roughly 2.7, which means that G&A represented about 27% of the overall cost here. And remember, this is only a snapshot in time at the end of last fiscal year, so please do head over to the company's website as well as setterplus.ca to look at all of the numbers for yourself instead of trusting a talking head on the internet. And although the most fun part, numbers are not the only thing that we're doing or talking about here today, because Western Metallica is not a heavy metal band that makes songs for old Western movies, although that would have been very cool too. But it's actually an exploration company. And I had to use both hands to count it, but I counted a total of 7 projects here. They're spread across 2 jurisdictions, as I mentioned at the beginning, so that'd be specifically Spain and Peru. And I'm not going to go over all of these projects here, but I'll start off with a few of them, specifically the Caña Brava. That's a Peruvian project. And I'm starting with this one because there was some news on exploration here earlier this year. This is in northern Peru, by the way, close to Ecuador, actually, and it's on the Upper Cretaceous and Miocene copper molybdenum belt. There are 4 properties making up this project, which covers in total 2,600 hectares, with an additional 5 properties being staked recently for an additional 3,100 hectares, with an outstanding option payment on it, by the way, to the tune of $2.2 million being due by 2027. This is Peru, and we're looking for copper, so I probably don't have to tell you this, but we are indeed looking for porphyries, copper porphyries. There are some historic workings here, and the thesis is that there are actually 2 porphyry centers, and Western Metallica's target is between 500 to 1 billion tons here. Where the interesting part comes in is, as I said, there was some news on this earlier this year, January 2020. January 2022. Yeah, basically, to be specific, is when the company announced that some geophysical work had been done on the Luz Maria prospect, resulting in a rather large area of 2.7 by 1.5 kilometer of potassic and phyllic alteration being found, with a magnetic anomaly lying beneath the sedimentary cover here. Western Metallica also did some geochem work here, resulting in anomalous copper and moly grades being found, supposedly driven by a multi-phase intrusion, which is important. But in normal people's terms, there are multiple fingerprints that might be pointing to a copper moly porphyry beneath the surface here. However, it is worth noting, as I mentioned, that there is something, if there is something here extending in depth, it would be below the sedimentary rocks and a quaternary colluvium, which typically forms at the base of steep hills after some sediments fall down the hill, basically. So that's Caña Brava. That's the Caña Brava project in a nutshell. It's what I would call the flagship project here, but it's not everything, as I mentioned. To the north from it is where the Turmalina project is. This is 2,200 hectares in 5 concessions, and a 6th one was actually recently added for an additional 200 hectares, surrounding and covering really what was a historic copper molybdenum mine that was mining a breccia pipe, and that was only one out of the 3 known breccia pipes there. But obviously the company believes that there are more, and of course they believe that the breccias didn't just appear out of nowhere. They believe they are being fed by something. Hopefully in this case that'd be a porphyry with the same size target, by the way, of between 500 to a billion to a billion tons of rock. Again, I was going to say, just as I said off mic, that this would be 500 million to a billion pounds, and I guess everybody would be happy with that, but I have to correct my notes. Option payments due by June of 2027 here, totaling $1.3 million. And that's Peru in a nutshell. And then over in Spain, there are 4 projects, 3 of which close to each other. In northwestern Spain, that would be on the Naval's Gold Belt. And then the 4th one is in southern Spain on the Ossa Morena Belt. And this land package also covers a past producing mine as well. But again, I'm not going to be doing a deep dive on any of those because this sounds like a good time for me to shut up. And gentlemen, Giovanni and Greg, both, first of all, thank you for being here. But I'm really interested in figuring out what the probability is that you're actually going to get that porphyry in Peru. That's really why I wanted to talk to you about. So I want to talk about that. But while the barbecue is heating up, maybe I'll start off lightly, because in that news release from late January this year that I just went through, you say that this is a 500 million to a billion ton copper moly target. Wide range, but also quite the claim. How'd you even come up with this?
Sorry, Giovanni, or do you want?
Yeah. So our target is 500 million tons at least 0.4% copper. That is more or less the same target for same size alteration footprint of other deposits in Peru. So after the first field recognition, we see this large alteration footprint about 3 kilometers by 1.5 right now, because we are extending east to west the area these days. That is very much similar to other big porphyry deposit in Peru, like Michiquillao, Rio Blanco, Tintaya, Cerro Negro. So it's in terms of alteration, our footprint is very much similar to deposit of the same size. So this is why this is our target. So we are just exploring a surface. So we are just assuming the size to be pretty much online of what we are expecting to find at depth, but there will be the drilling then to define the size of the deposit.
Sure. And I was also so that's a good answer, but I was also referring to maybe a part of it was, how did you come up with it? Meaning this is Peru. It's being looked at extensively, specifically for these types of deposits that you see with this type of fingerprint, especially given its location on the Ring of Fire. So how would people have missed this, and why do you think you're the chosen one to discover those 2 porphyries there?
Yeah, this is a very good question, Antonio. So we've been really surprised to find such a nice property so close to Trujillo and so accessible without other issue than walking, hammering, and sampling. No? But there have been a little bit of artisanal mining in the area, but they were looking for high grade, surface high grade, and this is maybe because it has been left behind by other operator and by other miners. So we are just, if you want, so we are looking at a conceptual target. We are ready with grades at surface. They are not economic yet, but it's an area, I said, very large in terms of alteration with good grades. Good grades, in our belief, because they are already pointing out a large mineralized system at depth. So the answer, I don't know the answer, because we've been surprised as well.
Yeah, and maybe I could just add a little bit more. So prior to us actually having the project, so prior to August 2023, when we acquired both options for Tourmaline and Kenya Brava, essentially what happened was there was a group that was working kind of in South America, and there was a team actually led by Paul Pearson, who's one of our directors, which was basically mandated to go out and find some prospective copper projects, primarily focused in Peru. And so essentially these guys came up with 10 projects, of which Turmalina and Canyon Brava were number 1 and number 2. So then these guys these projects were essentially held in a private company called Consolidated Copper. A group of investors, I would say quite well-heeled investors, put the company together. They then wanted to take it public. And one of the guys that was kind of mandated with taking it public approached me and asked me if I'd be willing to assist in the whole go public transaction. At first, my thinking was, well, I can't do that. I've got too much on my plate, primarily with Western Metallica. And then kind of occurred to me, at that same kind of time, we had been trying to kind of focusing more on copper because of the successful results we were getting from Nueve Thelti. And so I went back to these guys and said, instead of you guys going completely the path of basically a new IPO, why don't we put these things together? Western Metallica and Consolidated Copper were well, we had good amount of cash, so we wouldn't need to have done another financing, and then also they would get kind of immediate liquidity in terms of being part of a public company. And so that's what we did. So then we negotiated that deal for the 12 issued 20 million shares and the 10 million warrants to Consolidated Copper. And so there we ended up with these two properties. And at that time, back in 2023, I would say the copper market certainly, while we can see where it's gone in the last 12 months, certainly in terms of copper price, but I would say also Peru has really been quite favored in terms of, a jurisdiction, not only for copper, but mining in general, a fairly newly revamped mining law, and where there's a lot more transparency and how everything's done in Peru. I mean, the good news is if you've got a project, you take all the necessary steps for permits, you'll get the permits. I guess the downside in some ways is, because of the being more transparent, the timelines are perhaps a little longer. But, I would say I'd rather certainty of permitting as opposed to, to getting something rapid, which perhaps may end up with issues down the road. So I think for a company of our size, it was an attractive jurisdiction, or sorry, an attractive opportunity to get into a very attractive jurisdiction, and it fit with our fit with what we were going after. And then also really with Nueve Thelti, we recognized right away that we couldn't be a multi-jurisdiction company in the sense that in being active, we couldn't support both a geological team in Spain and Peru. And so that's where we decided, let's be realistic with our treasury and let's focus on Peru. And as you've said, let's focus we've decided to focus on Canyon Brava, which makes up, of course, Canyon Brava Uno and then Luz Maria, as being kind of our first focus. We are also getting now on the ground at Turmalina. I would say Turmalina is more attractive from a technical side. Please step in anytime, Giovanni. But from a social and permitting side, it's more challenging. So whenever you've had a historical mine, there's going to be some negativity. You can't think that you're going to have everybody on your side, right? I mean, there are eco-tourists all over the world and who are generally anti-mining. But I think we can get there. And really what I tell all these guys, there's no really good project in the hands of a junior company or a mid-sized company that doesn't have some issue. If this didn't have any issues and it was a 500 million ton asset, well, it wouldn't be in our hands anymore.
Yeah.
And then, what's interesting with Luz Maria, essentially we're only having to deal with one private landowner, which is really one family group. And then the bulk of the ground is crown land. So that makes the whole permitting thing a lot easier at Luz Maria, which is why we've focused on that. Yeah, and just to go back to Spain, I think what's interesting, although we don't talk a lot about Nueve Healthy because we're not terribly active, we're not active, and for the reasons that I've just said, but it is a very attractive asset. And what's been making it even more attractive is the government has launched a tender for an additional, I believe it's around 2,000 hectares to the northwest of Nueve Healthy. And so when you put this new ground, which is adjacent to Nueve Healthy, you have a project that could be a mine. And so the way we look at it with this, with and I must say too, there was two companies. It was one company out of Brazil and another one, Atalaya. I could say the name. They're also participating in the tender. And so the way I look at it, it's a good news for us on both fronts. If we lose the tender, the winner of the tender is going to want Nueve Healthy. If we win the tender, then great. Then Nueve Healthy's got that much longer. That much larger. And as Giovanni would suggest, the new ground is actually where we're seeing the geological trend. So it's actually very much relevant to developing Nueve Healthy into something of larger size. But so essentially our strategy in Spain is very, very reduced budget in Spain, see where the tender progresses and go from there. Also, what's interesting, what's happening in Spain is there is a process being run by First Quantum for the Cobre La Cruces mine. So that's actually generating a lot of interest in the Iberian Pyrite Belt. I appreciate we're not on the Iberian Pyrite Belt, but we're close. So, and we're in southern Spain. So that's also, I think, quite interesting for us. So I think a lot of people do see there being a lot of consolidation in that area of southern Spain in the next, probably 3 to 9 months. I mean, I don't have any idea how long that process will run, but I think with copper prices going where they are, I think there's going to be, significant amount of interest there. Yeah. So
I appreciate the overview. It's very detailed. I really do appreciate it, and lots to touch upon there. I do want to go back to Peru here for a second, though, at Luzmer, because I'm thinking about topography too. Of that, like that was the first thing for me popping up. Is like, oh, Peru may be way high up in the mountains, so that's why nobody's touching it. How's topography there? Where are you?
No, again, it's a very favorable place because we are talking about 1,500 to 2,000 meters altitude. So it's a very easy accessible area. The access roads are coming exactly where our main intrusive starts. So it's a very logistically wise. It's also a very easy place to work. Obviously, the topography sometimes is abrupt, so we had some challenge in running the geophysical line, for instance, because you have to go straight across the body, but it's manageable and is not depending on the altitude for sure.
Okay,
Yeah.
sure, fair point. Also something that popped up from that news release that kind of popped up to me was the quaternary colluvium here. Drilling through that quaternary colluvium could be a challenge. So how did that go? I mean, were there any drilling challenges, structural complexities, weird lithology, something else showing signs of slowing down or something along those lines?
No, the colluvium doesn't represent really an issue. It's not very thick. The colluvium is maybe maximum 5 meters. What is masking a little bit the signature from intrusive is maybe the sediment, but the sediment looks like very much mineralized. So there is something below for sure. We just received some results and they're confirming there is copper and moly within the stockwork hosted by the sediment. So the colluvium is not really representing any issue and will be partially removed also to build our pad because we will use a portable rig. So we have to don't excavate, but fill and prepare the drilling pad and moving the pad by hand. So it will be maybe a favor for us to have colluvium as well.
So it's not pushing your drilling costs higher or anything like that.
No, 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 at all. I've been using this rig in other places like Colombia, Nicaragua. So this rig will be very, very easy to move, very cheap, very effective, and they will reach the depth we are expecting to get. Yeah.
Okay. How much money are you paying, by the way, per meter drilled?
I have to see the last quotation, but I think it's around $150 per meter.
So
Yeah.
it's very cheap. This is, yeah, Africa cheap, basically.
Yeah.
Good. But so then maybe last question on the Coluvio, because you said it's not a problem, but I know that sometimes, depending on how big it is, again, it could throw off your geochem or even a geophysics.
Yeah.
Is that doing it for you?
We are not running the typical soil geochem because of the colluvium and other feature like paleolateral surface. They are masking the signature. But we already ran geophysics that we got, so we can explore very easily down to 250 meters with IP. We just got wonderful anomalies that we're using effectively to refine our drilling target these days. So we didn't have any problem at all. So they are not talking about a regolith profile that can affect your resistivity or chargeability. We are going straight on rocks at the end.
Is that geophysics that you're telling me about? What's the difference than what you would typically run?
No, geophysics, we run IP, so induced polarization. And so we just run at the moment 8 linear kilometer. And but I was saying that normally on the exploration line we also ran a soil geochem, but in this case was not the case because we don't have soils. We have immediately rocks, milled rocks at surface. So we run directly with rock geochemistry and IP.
Yeah. Good. Where I'm coming from with all these questions about the colluvial is also because I'm just wondering how well you understand the history of mineralization here, because you also mentioned that there are potentially sequential intrusive phases basically mineralizing the package here.
Yeah.
How well do you understand the history here?
Well, we had some trouble getting enough outcrops because all the outcrops that were on the main creek that is cutting through the properties, but we already identified 5 intrusive events. And this day we are a little bit building the phases and see which is the main mineralized trend. So we are doing more detailed work in identify which are the structural trends that are maybe carrying most of the copper and or moly. So we are still in the phase to understand better which is the intrusive phase we are looking at. We are thinking that we are looking just at the host rock. We didn't find the mineralized intrusion, the intrusion that is carrying the mineralization, but the new IP anomaly looks like point out a zone where you're going now to target more field activity and finally, ultimately, the drilling in the third quarter of this year.
And so in the third quarter is when you're going to know more about the structural controls or fluid pathways that you have at work here.
Yeah. The third quarter of this year, we will have we will prove with drilling that our concept was right. But we are building these days the fluids and intrusive history of the deposit.
Okay. Yeah. But so essentially you don't know what the fluid pathways here are like. You don't know, or like what's your thesis telling you? What's letting mineralization come up with basically?
For the geochemistry that we got, looks like we have a very homogeneous anomalous copper and moly intrusive that we consider still to be the host rock. The rocks they've been in place previously to the mineralized intrusive. So for us now, the mineralization is defined by the IP anomaly that we're just observing now under the sedimentary cover. And this is why we put a few platform all around this IP anomaly that will be the target for our drilling. But we are sure we didn't, the mineralized body is not cropping out yet.
Yeah. Are there any geological analogs that you can give me here to sort of better understand this, help me, develop an idea of what this thing could look like?
In terms of analogy or
Yeah, just geological analogs, like if you look around the world or in Peru itself, because you mentioned that the fingerprint of the system is similar to what else is going on in Peru, but something that is either in operation today or just more advanced.
the most similar in terms of structural control and type of rocks is the close Yagan deposit that's been found by at Bay. So this is a little bit our model in terms of level of erosion, because at Bay in Yagan, they found mineralization immediately 100 meters below the surface. And they got exactly the same grades as surface. So this is a little bit the deposit we have in mind, but with larger alteration footprint. So we are, and they got, I think, 270 million tons of rocks. We are looking at something bigger, hopefully. But as said, there are other deposits like Michiquillay, they have the same alteration footprint with much more tons in terms of reserve, and we are targeting this kind of deposit to find something bigger. But I mean, we have been, as said, it's a little bit premature because we've been working just at surface, defining the surface anomaly. So it's
early days. Early days for sure.
Quite early days, yeah.
I'm just kind of writing down what I understand so far. But so basically, you have a magnetic anomaly, mag highs, that sit on top of what you believe are potassic and phyllic alteration fingerprints. And then the geochem says that there is anomalous copper and moly in the soil there. And now you want to also, you're using IP to find the sulfide-rich zones.
Exactly.
That creates a drill-worthy target. Basically, that's what you drill, and that's when you have answers to all the previous questions.
Exactly.
Okay.
Already the MAG, they already pointed out the presence of magnetic plugs. They were quite distinctive of possible intrusive center. But now we have the confirmation, we have a coinciding chargeability anomaly with some of the MAG anomaly we previously identified. So every time that we are adding data, we are confirming that we are approaching the center. And this is the nice part of our exploration path so far. So everything is confirming.
How deep do you think you're going to have to go during this round of drilling?
Yeah, again, we are thinking if we adopt the same model they use again, we think 100 meters below the surface we will get already the body, but we plan to the maximum 250, 300 meters vertical depth for the first scout drilling phases.
Okay. So not deep.
No, the resource will be relatively shallow. Yeah.
How many meters in total do you think you're gonna have to drill before you can start getting a fuller picture where you can go to market and start screaming off the rooftops?
I think we will need to drill at least 2,000 meters to prove that our concept is there, and we need to go to the market and get enough money to keep drilling for sure. But 2,000 meters will be enough.
How much money is there left? As I mentioned at the end of December, that was 2.3. How much money of that do you have left now?
We're sitting at approximately 1.6.
Okay, 1.6
in terms of cash. And then we've got some VAT coming back from in Spain, and then another prepaid that we paid to the drillers with Nueve Thelti, that we've done a deal with another company, so we'll get that advance payment back. So that'll be so essentially in terms of financing or managing the treasury. Our whole idea is exactly as Giovanni said, with that 2,000 meter program. hopefully that's successful, and that provides us with the way to go back to the market and justify a more expansive drilling program. So essentially, coming up with results from a 2,000-meter program and saying this thing warrants more drilling and demonstrates a potential to, obviously early stage, but demonstrates a potential to get to a material copper moly resource.
Hmm.
And so that's where we're being super tight with our treasury and as lean as we can be, so that we can accomplish that drill program before having to go out to the market again. And
Sure.
quite frankly, we do have those 10 million warrants. And so, sorry, 20 million. No, sorry, 10 million warrants at 10 cents. So that would also bring additional, 5 million warrants at 10 cents. So that, and so my hope is, and those expire August 2024. And so my hope is we can get our stock up close to there where we would get those warrants exercised. It may seem like, a long way off from 3.5 cents, but quite frankly, the stock in between 10 cents and 3.5 cents is not much.
Well, yeah, but because you have 1.6 in cash, you have some VAT coming up. Europe VAT is fun, right? But so anyways, you have rounded up to 1.8-ish million in what I would call liquidity. Market cap is 2.5. That's $700,000 in enterprise value. So I don't think it's too hard to move that if you have decent things coming out. But so it was $150 a meter, and you want to do 2,000 meters, that's $300,000, right? Whereas you need about $1 million in G&A, I assume. I mean, are you budgeting the same amount of G&A as you did last year? Do you think it's going to be more or less? How do you look at that?
I would suggest our G&A, like you had mentioned, about 100K a month in terms of pure G&A, which includes, senior officers. So, Giovanni would be classified as a senior officer, not on the project expense side. We're more like 60K a month. We did, just as at our last board meeting, we reduced 3 of the senior executives, including myself, Peter Imhoff, the executive chairman, and our general manager in Spain. We cut salaries by 50%. And so we've been working really tight with the cash forecast to just we're determined to be able to have enough money to do that 2,000-meter program. That also is, hopeful that we're on time with our permitting, because obviously if we can accelerate the permitting, which, right now our current target is August 1. At one point it was October 1. So that extra 2 months in reduced timing on the permitting front helps us towards that cause of having enough money to drill a 2,000-meter program. Also, the vendor, so basically we dealt with, I guess he wasn't the only vendor there. It was a vendor group for both Turmalina and for Kenya Brava, but essentially the key spokesman for those 2 properties were in good conversation with him. And if we need to, defer any of our option payments, he's going to be happy for that. He's not going to object. In other words, he recognizes that, Turmalina being able to get on the ground has been more challenging, and kind of recognizes that us paying any option payments doesn't really make sense until we can drill. He's a reasonably market savvy guy and recognizes that in a difficult capital markets environment that I would say we're still in, although copper sure is having a bit of a go, but for a company like us, it takes time to filter down to a company of our size. And so he recognizes the long-term value that he's not going to just come after us and break us before we can drill. So we've got that in our back pocket as well.
So no option payments pressure expected this year, basically.
No. I mean, we may have to pay something, as a bit of a token to renegotiate, but in other words, it's a conversation that can be had for sure.
Okay. Well, so $300,000 budget for drilling, 1.2 for G&A, and that's just basically for what, the first half of the year, or when do you start drilling?
So we're hoping to start drilling August 1 is our current target.
Oh yeah, right. That's what you mentioned. So
Yeah.
okay,
So 3 months.
So Q3. Okay, that makes sense. Um, how many meters do you think you're gonna get out of a shift? How long is it gonna take you to drill these 2,000 meters?
But we think this will need at least 3 months because we start with just one rig, and we need to figure out how is the access once we will be operating. So I think conservatively we will need a 2 months and a half, I'd say. Yeah.
Okay, so done by October.
Yeah.
Okay. So, well, yeah,
Uh,
2 months, that'd be
yeah.
August, September, and
Yeah.
then potentially add October
Yeah.
to that, depending on it. And then assay results, where are you sending the core for assays?
We are sending the samples to SGS in Lima, and the turnaround time at the moment is about 10 to 13 days. So, and they promise to attend to this TAT. So it's
Okay. How
maximum.
many are they
Yeah.
doing a full assay, all elements, or is it only limited to
No,
copper moly in this case?
we will do full assays
Hmm.
because there will be exploration holes, so we need to understand all the behavior. Yeah, yeah,
I'm asking because that sounds quick. I
yeah,
mean, 10 to 13 days. You
yeah.
typically
No,
hear 4 to 6 weeks.
yeah, no, they are very quick. They are very quick. So these are actually is the TAT we are getting from SGS is 10 days, maximum 13 days, and they promise to have the same roast as well. Yeah.
Okay. But so essentially, assay results this year for sure. That's
Yeah,
what it comes
yeah,
down to.
yeah, yeah,
Okay.
yeah.
Um, Permits and everything is in place. You said, I mean, Greg, you mentioned something about the local population there not being super happy with you, but those 2,000 meters are you going to be able to drill those, or like, how does that look?
No, so the local population is more challenging. I would suggest at Turmalina, at Kenya Brava, it's actually the path is quite easy in terms of any sort of social and environmental issues to deal with. As I said, we're dealing primarily with Crown land, and just with one private landowner, the Soto family, and we don't. Fortunately, we don't see any large challenges at this point, to get the permits, so really what we've done at this stage to map out the permits, we've got essentially 20 drill pads, and now Giovanni and his team is actually kind of further refining the actual drill holes, really the coordinates of the drill holes,
Yeah.
which for the permits, you need to be close. You don't need to be spot on, so you can make adjustments if need be. And then then we need some water permits, and that's really kind of it. And
Yeah, we
for
already have the archaeological permit approved, and we will start now next week with the water permit, and then waiting for the final approval at the end of July. That's all. Yeah.
yeah.
Okay, so
Yeah, I mean, I think, yeah. I
No,
mean,
go ahead.
I think the number one thing is, is even if we go 2,000 meters, we'll have to figure out, what the first meters look like. And when we start to get assays back, do we start to release? I mean, also given what the context of the market's looking like in terms of copper, and then the overall equity markets, and come up with a bit of a strategy. Right now, our hope is to, preserve the treasury so we can get that 2,000 meters. Primary focus right now is to get the permits and have nicely well refined drill targets. Also try to get some samples out into the market and some rock samples and demonstrating the size, so we can actually get some numbers out to potential investors. We also want to see some numbers, which we will have in the next couple of weeks, from Turmalina as well, and those numbers are going to be good for sure. The numbers are going to be good. From what Giovanni sees and what he's telling me. So, and yeah, so so that's so we can try to get get some more interest in the stock, and it's
I,
it's
I
hard
want
to do an aggressive marketing strategy when you're also trying to preserve this the treasury as well. That's the reality.
That's exactly where I was gonna get to. Like, how do you get into the mode where you're telling the story more aggressively? Because you're excited about this geophysical anomaly, essentially, that you have here and everything else around it that we talked about so far. But how do you get that out into the market when you're on a relatively tight budget? And where do you go? Like, do you go to conferences? Do you use your own platforms? What do you do? And what's the plan for telling the story?
Yeah, I mean, Tara can, come into this conversation whenever she would like, but essentially, obviously we're using the regular channels, the regular social media channels, as frequent as possible, news releases, to the extent that we've got, real and, real, or I shouldn't say real so much as new news to report. We're also using our executive chairman's really strong network of all the different sales teams, in Toronto, with all the different brokerage firms from Canaccord to BMO, Paradigm. We've got good connections there. A lot of those guys participated in our sub-receipt round, and they're still holding stock. So we're trying to communicate to them and see if they can generate some buying. As I say, I mean, we're pretty lean in terms of the numbers of shares and the road to 10 cents. So, it won't take a lot of buying to eventually get some forward momentum on this. But, we're trying to get the story out. And I don't know, Terry, if you want to add anything in terms of how we're doing it, but I mean, we're trying to do it in as efficient a way as possible. And then also, management and people very close to management are also buying stock.
Yeah, just to kind of piggyback on what Greg said, we have been, quite conservative in our marketing spend from the beginning, kind of allowing the projects and the developments to speak for themselves and, putting most of the capital to work, which really is how you're going to create shareholder value, right? So it's not just, marketing for the sake of marketing, but marketing when there's something really important to say, right? And that actually is a strategy that allowed us to progress to this point and to have such great projects under the portfolio that potentially, a company of our size with what we've raised from the get-go would not have been able to do had we, spent kind of negligently in the market, doing strategies that maybe would not have resulted in anything meaningful for the shareholders, right? So Greg, I think, has been, right in being conservative with the marketing spend. It's not to say we haven't gone to the events. We attended PDAC. We go to most of the very, kind of high profile events, and we all do have a very strong, capital markets and just general network in the metals and mining space. So, Greg, Giovanni, Peter Imhoff, of course, myself as well, we all, have a network that we can leverage to get the exposure. And we've pretty much been doing that organically, just, directly reaching out to our contacts and making sure that people understand what the Western Metallica story is. I think, obviously, once we have some more meaningful developments, some results from Caña Brava, we certainly want to take it to market a little bit stronger, because that would be the time, right? It's not just about execution, it's about timing. So that's really, what we've been focused on. And we do hope that the market is going to respond at the right time to what we're doing.
Yeah.
Thanks for weighing in, Tara. And I do hope you're right. And I do hope that eventually there are those results there that you can go and start screaming off the rooftops, basically. At what point would you consider selling or letting go of some of the other projects, Greg, so that you can focus only on Caña Brava? Like, what would you want to see this year in those results that I'm mentioning here, so that you say, okay, Spain, we had a good time, but let's focus on Peru?
Yeah, I mean, I would say what we, because of the sedimentary cover, primarily at Luz Maria, we cannot clearly demonstrate the existence of the porphyry, or we can't necessarily speak to potential grade until we drill. So that's kind of in some ways being a setback. But having said that, from what I've been told, is the fact that you see these anomalous grades and nothing clearly outcropping, it's almost better for the potential size of the porphyry as a whole. So, so I guess the point is really we've, we are hoping to be able to demonstrate the existence of the porphyry earlier, perhaps even prior, or certainly the potential for porphyry prior to having drilled. But it's clear that to the basic investor, they want to see a drill result before they really jump in. And my take is, well, you're going to have to jump in now that there's kind of a line, we've got line of sight to a drilling start date, which is within 3 months, which I wouldn't suggest is too long. That is time to really start to, take a serious look at this. But so, to answer your question, we're not going to, we don't need to, really do anything with Nueva Healthy at this point, because it's really not costing us anything to maintain. We've got the core stored at a with another company for a nominal fee of a few €100 a month. And then in terms of staffing in Spain, we've cut it back essentially to our one general manager in Spain with Joaquin Marino. And so, obviously we're not going to do anything with Nueva Healthy until this tender is resolved, because the value of Nueva Healthy will be a lot higher once that tender is resolved, whether it's ours or whether it's another company that would want to do a deal for Nueva Healthy. But having said all that, I mean, depending where copper goes, if someone was to come up and another company operating in the area was interested, then yeah, we would entertain a deal. But nothing at this point though right now. For those reasons, really, it's low cost to maintain, in improving copper environment, and then this tender to be resolved. So unless it was a really attractive offer, I can't see us really entertaining that at this point.
Yeah, fair point. I understand the risk reward there, with the risk being little, but you being able to wait for at least this drilling to come back. What else I'm also thinking is that you're chasing this large system, right? You're hoping this is a large porphyry, and small companies chasing large systems don't necessarily have the best track record unless they get help, right? So what about bringing in a major for, I don't know, an earn-in option agreement or something among those lines? Could there be something in the drill holes this year that you see it and you say, okay, we bit off more than we can chew. We need to bring in a larger company to help us drill this out.
Yeah, absolutely. And the really most logical, bigger partner to go to would be Hudbay, with their deposit of, it's 177 million tons, 0.4% average or copper equivalent with their moly. So they would be and I know that Giovanni's been speaking with the local guys there in Peru that are kind of looking after that asset for Hudbay. So they'd be a logical partner. So we would say, this is what we've got. It's got similar geological characteristics to what you guys have, and you've got now the 177 million tons. For that to progress towards a mine, we need to get that resource up to 500 million tons. And so what we've got here with Luz Maria, Kenya Bravo 1, and additional work there. So I think they would be, as I said, I think they would be a logical partner. And at this point, I sense that they're not terribly active there. They've got other assets and other priorities too. So perhaps, that would be an opportunity for us to, do some sort of transaction with them, and then we take it on, and manage the next phase. But so they would be obviously a logical partner. There is also, other groups that are coming into Peru looking for copper, clearly.
And Greg,
you know,
don't forget the conversation that we had pre-PDAC with one of the majors, multi-billion market cap company that had interest in Kanya Brava and kind of diving deeper on the technical side. Giovanni took that meeting with Joaquin, and it was actually a very good meeting. So that kind of brings you back to, yeah, a major player would be interesting to partner with. And also, you know, it does speak to the fact that even if we haven't been marketing, there's definitely eyes on the story. So.
Okay, what kind of company? I don't suppose you can tell me the name, but what are we talking about? Is this a company operating there? Is this a company looking to get an entry into South America? How's that look like?
Yeah, there are company operating big mines in Peru already. They are looking for same size deposits in Peru. Yeah.
Okay, fair enough. Yeah, I don't.
I think what's fair to say, and I, you know, not to take anything away from us, but I think Luz Marie especially attracts, you know, at the attention from the geos, the real technical guys that understand these systems, understand the potential of these systems, and they seem to really like this big group, you know, or, you know, this big company with these, you know, it was basically two guys out of Vancouver and another guy out of Lima. They were surprised at what we had actually, and how we managed to get a hold of something like this given our size.
Yeah.
Obviously for them, it's hard, it's a bit of a harder sell to their corporate team when they say, okay, well, you know, do they have a resource? No. Have they had any drilling results? No. Okay, well, so yeah, that seems interesting, but come talk to us once you can show us some numbers. You know, and that I think goes further to the whole case that we need to have at least that discovery hole. You know, we need to have that discovery hole that demonstrates that something is existent down there. It's homogeneous, so it could grow quite quickly. That's when that sort of partner would be, I think, be ready to come in. You know, and yeah, that's really. I mean, I think, you know, from coming from PDAC, I think the markets in general have improved, but what a lot of brokers and bankers are telling us, with Peter Imhoff and myself, we went around various meetings, and they saw the idea of actually, you know, going to a corporate to do your next round of financing. You know, whether it's, you know, $1 million raise, you know, at these levels or slightly higher, maybe perhaps a premium, we would hope, and then get a, you know, a bit bigger drill program out to maybe, you know, 5,000 meters to 7,500 meters, and then really see and be able to really test properly to see what you got there. Or what the potential could be there.
Okay. Giovanni, you wanted to add something, I believe, as Greg was talking.
No. When Greg was talking, I was thinking that we have some consultant working for us and the big guys, and they always been surprised how flashing is the alteration, how easy was to access this part of Peru, and they've been comparing the big deposit in Peru as well, where they are working as a consultant. So we are sharing idea, and we are pretty confident that so far we are progressing well toward the target.
Right. Okay.
Yeah.
Sure, but yeah, there's going to be more to talk about later this year. What about in between? I mean, we talk about keeping the market engaged and how you tell the story to investors and so on and so forth. But if you have to wait between now and the end of the year to have assay results out, how do you manage the meantime? The market wants news releases, right? So what do you do in the meantime?
Yeah, I mean, I would say really, you know, I mean, yes, you're right in the sense that we can have assays from drilling, but there's going to be some of the GIS work that's going to be released, and further interpretations. There's going to be rock chip samples that are going to be continuing to demonstrate the growing size of the target. There's going to be sampling out of Turmalina, which is going to demonstrate, you know, what these breccias are showing, you know, and what's there. And then also, you know, the results of this tender in Spain. So, I mean, as I say, we can't, have any sort of drill results to put out, but we've got what means, to technical guys and geological guys, we're progressing the project, and then obviously permitting. I mean, having a drill ready project with this sort of footprint in Peru is worth more than zero, put it that way. That's the way I look at it. And we're not getting much more than zero for our project right now.
I think that's pretty much the thesis right there. And that's when someone suggested you should look into Western Metallica, I looked into it and I was like, okay, yeah. I mean, there's something, the market is giving it nothing. Let's talk to these guys. Good point. Okay, I'm looking out for the news releases. In terms of insider ownership, Greg, you own almost 10 million shares yourself. What's your average cost of capital? When were you buying those shares mostly?
My average cost of capital now, I own approximately 14 million shares.
Okay.
My average cost is approximately 5.5 cents.
Okay.
So, when we were down at 3, I was buying the stock. I've participated in all the rounds from the first round when we were still a private company. That round was at 10 cents. And then also I participated with a pretty healthy chunk in the 30-cent round as well, in the sub-receipt round. And so, yeah, and I've been kind of buying up the stock. I mean, to a point where, really where, and that's really where, a lot of us we're really focused on making money through the equity. That's why we don't mind taking a haircut in our fees, because in the end of the day, we're fully aligned with the shareholders to make money with the equity. That's where it's at. Yeah, that's really, I guess, all I can say about that.
The SEDI filings shows as 9.6 million shares. That's where I came with the 10 million, by the way. But you said 14. How come?
Yeah, because it's because there's a bunch of stock is still escrowed because our go public, we went public in April 2022. So it's released over a 36-month period.
Okay.
So there's still a bunch of stock that's still in escrow.
Sure.
And that doesn't show up.
And seed round, was it, what did you say, 30 cents?
Our seed round was, well, the first seed round when we rolled in the private company into, no, the sub-receipt financing was done at 30 cents.
Mm-hmm. Okay.
Our last raise was 30 cents.
Sure. Okay. Do you know who, like, if I gave you 5 phone calls, how much of the stock do you think you'd be able to locate? Like, who else owns this company beside the 25% insider ownership here?
So there's 25% with insider. I would say it's maybe a tad bit higher, but no, it's approximately that. Then there's 20 million shares that are held by by the Consolidated Copper guys. I'm not sure how much they have sold. I don't sense from what I've spoken to them, I don't think that they've sold a lot. So, but we can assume, say, maybe 5 million's been shaken out. So that's 40 million. And then essentially I would go back to Peter and we would go to the various brokers and the heads of the sales desk that they didn't participate as brokers themselves or, for selling or buying for institutions, but they hold a lot of that personally. And those were pretty large checks coming in for our sub-receipt round. So, so we would get that probably up to 50, get us up to like 55 million, I would say, out of the 70.
Okay. So the majority here is basically traceable, who own. And why I'm asking this is because, I mean, I open up a price chart and the stock is just pretty much at all-time lows, right? So I'm just wondering, like, if this pops to 10 cent or whatever it might be, again, big if, there's no guarantees for that. But if it does, how many people are going to want to get out? So that's where I'm coming from with this.
Yeah, I understand. And I would say, yeah, I mean, I can never say that for sure. I mean, who would want to get out? I mean, the 30 cent round, from what I understand from Peter, he's in talks with those guys. They still hold the stock. I don't see really why, this time of the year, why they would want to get rid of it, other than if they're just like, you know what, I don't even want to see that on my account anymore. It's bugging me. So get rid of it. But, from a tax perspective, not this time of year. So, I'm sure there's going to be always sellers. It's and as they see some volume, just as we did see some volume, as when we got up to like 6.5, 7 cents quite recently, sellers came in. But not a lot of buying still is really what's been, I think, the more of the theme. Like, I think it's been a lot of probably guys saying, well, if you're not drilling until August, why now? Why buy now? And what I say to that is, well, why not buy at 3.5 cents when the company's trading at essentially cash? And then you be at 3.5 cents when the stock's at 10 cents instead of waiting until 10 cents. Obviously that's kind of pretty simplistic argument, but you can't wait until everybody else is ready to buy it as well, right? I mean, and even at 10 cents, we're a $7 million market cap company with a pretty strong asset base. And the good news really good news. The point with focusing on Luz Maria now, if we come out, that we don't get what we wanted to see, lower grades than we expected or whichever, we have another project to go to. I know of too many companies of this size that are single asset companies, and you go drill and you miss, you're done. You got no money left, you got no project. That's called a shell. And whereas you don't have anything else to go to. And so that's where I think we've got other things to go to. We're also going to continue to look and really take advantage of the team that we have in Peru that Giovanni's built up, because I really do believe it's actually a world-class team for a company of our size. And so we're using them with their local knowledge to pick up more ground. And on the cheap, obviously, as on the cheap as best we can, with the idea when the market really starts to go on fire, then we have projects to option out too, and grow the company that way as well. But it's yeah, it's been a difficult in the sense that we've had to wait, and I shouldn't say wait. Well, lack of patience with investors and everything, not recognizing, the timeline and the work that goes into getting a project in Peru fully permitted. It's not that straightforward. I mean, yeah, you can go and try to buy a resource, well, but that costs a lot of money, as opposed to growing a resource this way. Certainly give you a lot more bang for your investment dollar, really.
Yeah, especially when you
This
mentioned
is a high beta. This is clearly a high beta investment. That's really what this is, right? This is a 10 bagger for you. If we're successful, if we're not, yeah, you've lost some money, but there's a chance that you could hit this one out of the park.
It's definitely early stage exploration is what we're talking about here. So it is this pretty much the riskiest part of the Lassonde curve. You can get involved, and all the rest remains. But I think I think this being a good overview, giving me an idea. Took a bunch of notes, maybe too many really. But it's been fun talking to you guys. I'll be looking forward to some updates. What am I forgetting to bring up? What did you come here hoping to talk about, but I'm failing to bring up?
Oh, no, I mean, I think I'm pretty satisfied with what we've covered. I mean, I think, really what we want to kind of get across that we're a company that's not trying to over promote. We're trying to build the company in a proper way where the horse is pulling the cart. We don't want to just, run and market the crap out of it and waste shareholder money on telling something. We want to, build it in a logical way and market as we progress and let the assets tell the story. That's really what we want. We don't want to over promote and then hit a wall. We want to be logical. And I can say too, I think we're being very careful with the Treasury. We're being very respectful of limited shareholder money. And you know, and we're trying to keep it lean so that we can put as much money into the ground as possible, because I think that's ultimately how we're going to generate shareholder value.
Well, thank you, gentlemen, for the overview. This has been pleasant. Thanks, Greg. Thanks, Giovanni. I'm going to be following along wherever I can. Hopefully, you can do a follow-up video once you've drilled this thing to see what comes out of the ground there. And in the meantime, I am going to be going back into Canada, so traveling back to the northwestern, not Northwestern Territories, northwestern Ontario, that is, to meet Trey Wasser and Maura Kolb, who are respectively the CEO, that being Trey, and Maura is the head of exploration as well as president of Dryden Gold Corp, a gold explorer co. Company is listed as DRY on the TSXV in Canada, where an average of about 250,000 shares trade each day, with a 52-week high of 33 cents and a 52-week low of 10 cents. With a market cap of about $13 million and about 89 million shares outstanding, today this is a 15-cent stock. Adding 4 million warrants and about 3.5 million options leaves us with about 101 million fully diluted shares. A couple of famous names in the roam in the share registry here, though. That'd be Eric Sprott. He owns 4.5% of the company. Rob McEwen owns almost 4% of it. Management in itself owns a little over 17% of it. Alamos Gold owns 10%. The Euro Pacific Gold Fund owns 8.3%, and another institution was Delbrook Capital. They own 7.7% of the company, which for the math geniuses among us means less than 50% of the companies in the hands of retail investors. Looking at the last financial statement, which is dated December 31, the company had about $4.7 million in current assets, most of which, that would be $4.3 million to be specific, was in actual cash, as well as some GST receivables and prepaid expenses on top of that. The balance sheet shows me that there is no long-term debt, of course, and there is about $550,000 in account payables, or was at least in December last year. That statement tells me that Dryden spent about $1.4 million over the entirety of 2023 when they were private, by the way, about $965,000 of which was spent on exploration expenses. And the rest I would typically classify as bureaucracy, which basically leaves us with a monthly burn rate at around $40,000. In terms of ratios, administrative expenses represented about 30% of the total spent last year, which leaves us with an exploration to administration ratio of, call it, 2.2. Now, two things. Again, this is, as I said, a newly listed company, so these numbers are highly likely to be different for 2024, and it's your responsibility to check those. And yeah, again, just remember this is a snapshot in time. It was at the end of last fiscal year, and it doesn't mean anything more than just that. So please do head over to the company's website as well as setterplus.ca to look at the most up-to-date financial numbers for yourself. Or, I don't know, send Trey here some questions. I'm sure he likes talking about balance sheets. And although I do too, so does everyone else. That's not the only thing we're talking about here today. Dryden listed in January, so early on in this year, after doing some drilling before that, and they did that drilling after consolidating a 60,000 hectare district, 600 square kilometers of what used to be a very fragmented pieces of land. They're kind of bundling them together. They were owned by many different parties and therefore relatively underexplored for that part of Canada. I'm saying relatively underexplored because it's not unexplored. It's been looked at before. And the current focus for Dryden is actually a brownfield target that goes by the name of Gold Rock. Gold Rock, which has some historical drilling intercepts on it, were highlighted by 15 grams of gold over 6 meters, 12.7 grams over 4 meters, 12.6 grams over 4 meters as well. As well as also a historical mine. The Queen Alexandra open pit mine is in this area, all of which are relatively shallow, by the way, these intercepts, which is exactly, I suppose, where the opportunity lies, according to the company at least, and not because mineralization is expected to continue being shallow, or at least not only because of it, but because most other deposits in the area, so think Kirkland Lake and Red Lake and Timmins, they're all deep, right? Red Lake and Kirkland Lake, they're both over 2 kilometers deep. Timmins, almost 2 kilometers deep, right? But Gold Rock here has never been explored to such depths. There have been 4 phases of drilling completed by Dryden to date on Gold Rock, with the assays from the 4th phase being released last week, which in terms of grades, they were not repeating the things that maybe everyone wanted to see from previous drillings. But interestingly, hole 9 did intersect a newly defined footwall zone with about 6.5 meters of 1.4 grams of gold, with a higher grade intercept of over 10.5 grams of gold within a narrow 80 centimeter intercept, and that was at about 400 meters of depth, which, and this is the important part, I assume, this expanded mineralization beyond the newly discovered mineralized chute, which came out of the second phase of drilling here. And they did that by stepping out about 100 meters from the discovery hole off that chute. So you can probably imagine that gold rock will be the focus of discussion today. Again, the two other targets, though, on this package, so gold rock basically lies between the two, with Lower Manitou being the to the south, and then Tremblay being to the north of it all, with historic drilling and channel sampling showing that there might indeed be potential for discoveries here. Which reminds me of one of my favorite questions, and this is, by the way, where you come in, Trey, because you're essentially comparing this to Timmins and Red Lake, so a bold target given the size of both, but not too far-fetched, and not too far-fetched of a comparison either, which is something we can talk about later with you, Maura. But the point is, historic drilling happened a while back here in this region. Many others have looked over this project in the meantime, yet not much meaningful modern day exploration has been happening. So if it's as good as you hope it to be, why didn't anybody else get these lands before you did?
Well, the way, Antonio, that was a great recap and of the company and overview. You clearly have done your homework, and but this property really has not been looked at by and passed over. The company, the Tech was in there on over, and they only explored over on the Elora vein, which was part of our phase 3 program in the 80s and maybe early 90s. And then this property really sat in Goldcorp's portfolio from the very inception of Goldcorp. In fact, Rob McEwen, had this property in Dickinson, always liked the property. Of course, they got very busy at putting the Red Lake together and literally never did any work. There's no evidence of any work that Goldcorp's ever did on the property in all the historic stuff. So they sold this to a small company called Manitou Gold in 2007. And it was Manitou who did most of the exploration in the Gold Rock camp. And what they did is they started out doing some drilling, and they on a step out across one vein, trying to get to the other at depth, they hit that a very high grade intercept at about 75 meters depth of 53,000 grams over half a meter. There's a halo around this mineralization in these high grade chutes typically. And so that even graded down to 3,497 grams over 8.5 meters. So really, then what they did is they tried to replicate that, and they did about 20,000 meters of drilling just around that hole, and they did a very good job of kind of proving up this one high grade chute. We learned a lot from the old historic grades there, and in the first drill program we did do some drilling to kind of test the structure and the plunge of that to get an idea of what was controlling the gold mineralization. And so I'll let Maura talk more really to the why this is so much like Red Lake, because she's the one who has extensive experience working heading the exploration program for 5 years for Goldcorp at Red Lake, as well as a couple other companies that came along. So really very underexplored, this whole district. A lot of the rest of the 30,000 meters of drilling that's been done on the property was in that lower Manitou area. So you had some drilling down there, but this goes back to the historic mining, which really started in the late 1800s and right at the turn of the century. Actually, at that time, they were mining such high-grade gold that this area was called the New Klondike. But as you mentioned in your overview, in the Gold Rock camp, there were probably 12 different historic mines, all of them operated by different companies. All of them, went out and built their own mills. And when they got down and the mining got tougher at about 100 meters, most of them, went bankrupt. And again, these Archean systems, they can be hard to just follow the vein mining down. And, today we have the drill rig to prove out some of these systems. But it's a very exciting area, great infrastructure. Other thing that I might mention is the logging in the area. So Dryden is a logging town. They have a paper mill there. And historically, this was very heavily forested ground. And over the last 50, 75 years, there's been a lot of logging. The logging there tends to be kind of a clear-cut variety. So a lot of the access into the deep forest where it's both been cleared off to a great degree and roads put in, logging roads that some are now just trails. But, of the drilling we did in the first 4 phases, we were able to drive a pickup truck right into the rig. So compared to a lot of areas where, you have to have helicopter support, this area it's got a lot of high-grade gold, some super high-grade gold, and is relatively unexplored.
Yeah, you're right, Trey, and I hope Maura and I can talk about more of the rocks here later on. But you also, as you mentioned, you did a couple of phases of drilling here, while still private, right? Who was financing all that?
Well, we were, we started this company about a little over 2 years ago with some private money, some people from Ely Gold royalties after we'd sold that company, and we were able to attract Eric Sprott privately and a group out of Toronto, a Metalist, a small bank that does a lot of these kind of deals, and is a long-term holder and helps put these deals together. We also were able to attract Darren Wagner, who is an old friend, and so basically management put a lot of the money in, with some money coming from other private individuals. A lot of bankers and brokers got involved. Adrian Day got involved privately, and then also came in on the RTO. Delbrooks, president, came in privately in those early rounds. So it really was management, and then some of the funds that were getting in at the early stages, where we were able to raise. We raised about $4 million privately, and while the deal we did with Manitou Gold, who has been bought out by Alamos, and that's why Alamos is our largest shareholder. I would say it was not a cheap deal. We basically, over a period of 4 years, required to pay about $7 million in cash and stock. And happy to say at this point, we only have one more payment that'll be due next April, 2025. For $1 million cash and $1 million worth of stock, and then we'll have 100% of that property. So we've privately made most of the payments, and I could honestly say that other than the RTO, which for regulatory reasons I was not allowed to participate in, I've participated personally in every round of financing that we've done here privately.
What was the valuation that you raised that $4 million at privately?
With dilution, we did, there's no shenanigans in this structure. A lot of times you'll see where the insiders have put a property in and taken tens of millions of shares, or for just putting a contract in. We raised just a little bit of money, $40,000 to start at 2 cents, and then did one round at 6 cents. But the bulk of the money was raised at 10 cents. We even did one round in late 2022 or July of 2022 at 25 cents. So, that was when the market was much better, and it looked like by late in the year we were going to be able to pull off the RTO and go public. And of course, the market kind of fell apart in late 2022. So I would say on average with everything that probably the average valuation or the average cost, in the private was probably around 9 cents. Stock's currently trading at 14. The RTO was at 15 cents. So we're right in that ballpark there of, of course, the stock's moved around quite a bit, but we're starting to really get some good volume in it. So, there's no people in this thing at super cheap valuations. I would say with the 25-cent stock, my cost is probably right there around 10, 11 cents.
How many shares do you own again?
Pardon me?
How many shares do you own again?
I own about 3.5 million shares.
Okay. And there's no founders shares at like a half a penny or something like that?
No.
Okay.
As I said, the lowest valuation, the lowest raise was 2 cents, and that was only for $40,000 to start the legal process and get going. So,
okay.
And then I think only 200,000, maybe a little more, was raised at 6 cents, and pretty much everything after that was at 10 cents or higher.
Yeah, I like that because sometimes companies, talk about these things to me, and they would tell me, the lowest valuation was this, but then there was a very it was a very small raise when the founders came in and stuff like that, and that would sometimes happen at like a tenth of a penny or something like that. So that's why I'm checking for here. But as you said, no shenanigans. I appreciate that. Obviously, is there a royalty on this project still?
Yeah, there is. We a 1% royalty. Again, this is a consolidation of ground here that have probably in total has been at least a dozen, maybe 15 different contracts and options, most of which have already been exercised. So there's some underlying royalties. We're actually working on a nice map now that shows all the royalty interests, but basically there's none. The royalties range anywhere from 1 to 3%, and there's none of the property that's over 3%.
Okay, and all those royalties are in the hands of the original vendors. It's not management or insiders who have those royalties.
No, absolutely not.
Okay.
The only thing was, Manitou did some work with Goldspot, who took royalties on property. So as far as royalty companies involved, Goldspot, which is now Earth Labs, they had a deal where they were giving half of all the royalties they originated to Triple Flag. So on the main Gold Rock property, they have a 1%, or excuse me, they each have it's a 0.5% split between them. So Triple Flag has a 0.25% royalty, and Earth Labs has a 0.25% royalty. And then the property we just purchased, we call Cross River in there, one of our most recent purchases, that has a 1.5% royalty to EMX. And that has a buy down on it for half of the royalty. So no super royalty burdens on this property at all.
Sure. Yeah, fair point. Again, just checking for the insider ownership of royalties is the important part for me here. I'm going to be back, Trey, to talk about some of the financials here later on, but I'm sure people need a break from talking about numbers, and I'm sure everyone's waiting to hear from Maura as well. So Maura, let's talk about the rocks here, specifically in the context of this being a geological comparison to Red Lake and Timmins, as Trey mentioned at the beginning. How does the Dryden area as a whole compare to those two in terms of, let's start with the structural controls and mineralization distribution.
Certainly. So that's one of the theses we have. First, we'll talk about the main shear structure or the deformation structure and why we feel we've staked the best ground in the Dryden land and the Dryden region, rather. So we've looked at what we call the Manitou Denoric Deformation Zone, and it's been compared by Metal Earth. They do studies out of Laurentian University. They've compared it to Timmins and that Porcupine Duster Fault that is so important in that camp to be, about 1 kilometer or 2 kilometers away from. That's where all the big deposits really are. So we love that comparison. very, very nice that it would be your main structure. For those that follow that sort of thing, it's the D2. We believe that's when the gold came in. So we've strategically picked up everything basically from that northeast corner of the greenstone belt down to the southwest, all along that deformation zone, so that we're within that sweet spot for high grade gold mineralization. And then when we look at the comparison to Red Lake, you see a nice folded area within the Gold Rock camp, and you'll see the same sort of geometries in the Red Lake camp. A nice fold, complex with cross-cutting faults coming through it that intersect that main shear zone. You kind of need those intersections and those traps created by the fold to create great places for high-grade gold to pool and fall out. So that's what we were looking at in terms of similarities, and why it drew me right away when Trey phoned and was looking for someone to kind of run the geology and get this project kind of up to snuff in terms of a strategic, really systematic approach for exploration. I couldn't say no with all the similarities I saw to these great deposits.
Let's maybe talk about more about these similarities, specifically from the perspective of the host rock characteristics, from lithology through mineralogy, and then the alteration package as a whole that's now showing up with this 4 phases of drilling. Is that similar to those camps as well?
Yeah, so one of the things we have, I would say a benefit that we have is we're kind of able to use the hindsight from all the years of work in Red Lake. So myself and the VP of Exploration spent quite a bit of time there. I'm at about an 8-year vet of Red Lake. So we were able to look back and see things that would have been helpful to save on exploration costs there. There are certain units in Red Lake, we call them the high titanium basalts, that if you do geochem work on your rocks, you can actually start to see we call them stratigraphic layers, but the different layers within the rocks. And some are better hosts than others, specifically that high titanium basalt. It's highly magnetic. So what we can see from the geophysics is we start to see those layers coming out just based on the mafic rocks we have, and then certain ones are showing up more magnetic. So we saw that similarity just in the geophysics before we even got boots on the ground. And then as we started mapping last summer, we started to notice that we could find this, and we were using basically all the tools available. So we have the guys using mag-sus guns to check the measurements of how magnetic the rocks are in the field. And then we're also doing that, plus we're coupling that with all the geochemistry, so we can get a better base for what's going on early stage. Now, the alteration here is a little bit nicer, frankly, than what you see in Red Lake. One of the challenges in Red Lake is that it's a very narrow alteration, very high grade, but there's not much signature around that. What we're finding in Gold Rock, which I'm quite happy about, is there's a larger alteration halo around the mineralization, so we can start to vector in a little bit better. We're actually seeing on surface, when we look at the vein is narrow. It ranges from 1.5 meters at its biggest spaces to about 0.5 meter. And that's not untypical for these kind of Archean systems. It's actually pretty normal, but we're seeing alteration up to 10 meters on the side. And that is silicification and lots of sericite alteration. So you can definitely see it when you step on the rocks. You'll see kind of a weathering and that kind of brownish color from the biotite alteration that's also present. So that's great to be able to see, and it helps us vector in. And now something that we see, I would say less visually, is a signature of arsenic. So we've done some work compilation looking at the regional package, and we'll see a little bit of an increase in arsenic near the mineralization. We're seeing that in the geochem. What's nice though is we haven't seen really any arsenopyrite to date. So I feel like you're going to ask me this later, but I'm just going to bring it up now. We don't see the refractory. We aren't seeing the gold captured in that. And there has been a bit of metallurgical work on this. Manitou did a pilot mining program. They did 5 blasts along the vein on surface, and they got great recoveries. It was 88.6% with gravity and 99.8 once you add cyanide. So we're really looking at a free gold system here. Something that Anna and I are doing because we want to better understand where this arsenic signature may be coming from. We see a lot of pyrite mineralization. So the gold seems to be very associated with pyrite. A little bit of pyrrhotite, chalcopyrite, but pyrite's our main sulfide that we see in the system. So we're going to be doing some thin sections to see if perhaps there are inclusions of arsenopyrite in that, because we're not seeing it visually in hand samples we've taken on surface or in the drill core.
That is something I do want to talk about later on when we're talking about grade as well. Specifically arsenic arsenopyrite, as you mentioned. So maybe a couple of things there later on. But why is it why is the alteration here different if it's the same system? Are the primary minerals different on your package than they are at Red Lake?
I think we're just a bit more lucky here. You'll see in other camps, Timmins, you'll get more alteration. Red Lake's kind of an anomaly where you really don't have much to vector in on. It actually makes it more challenging in that particular deposit than some of these other Archean load gold systems. So I'd say we're a little bit more typical, not atypical like Red Lake here, which is nice. That gives us that ability to vector in. So even if we don't hit the high grade mineralization in a drill hole, like I'm thinking of hole 13 from this last press release, we believe that we've actually hit the halo style mineralization, or we're very close to a high grade shoot with that, because we did hit 10 meters of, I believe it was 0.75 or just under a gram. So we believe we're getting close to where one of those high grade shoots would be, because we have that wider alteration halo, which is good, something that you don't necessarily have in these high grade systems like Red Lake, but you do in other ones. So that's nice, and it's able to give us a tool to vector in where we believe these things will be.
But so the difference is really in the size of alteration as opposed to
Yes.
in the mineralogy.
Yeah, I would say it's more in the size, so that you actually do have halo kind of reaching out into the rocks.
Okay. You also when you were talking about alteration here, you said that alteration here is better. What is here, as in those phases, 4 phases, you've stepped out quite a lot. Is it just the same alteration, same mineralogy throughout?
Yes, so far we've seen the same throughout. Even Elora, in terms of alteration, looks the same as what we've seen at Big Master. And those are two parallel systems that are both happening in Gold Rock. Although in Big Master, we are seeing more vein style mineralization. And then at the Elora system, it's more sulfide disseminated with little stringers and things, quartz, but not a specific vein. So that's kind of good. You usually want to see in these systems different styles of mineralization. It just kind of means that they're a bigger footprint, and it's not just kind of a one-trick pony.
Okay. So this is an organic system the year after, widespread too.
Mhm.
And that's all basically checking out what you're telling me here, as far as I understand it.
Yeah, exactly. So one of the major elements for us that we wanted to test in this first drill program was to step out to make sure that the footprint was big enough, because you do have fairly small footprints for the high grade shoots themselves, but you want to make sure that you have enough of these repeating structures to have several of these high grade shoots clustered together. And so that's really what was driving our first drill program. One, we needed to understand the controls on that. We had some hypotheses based on the surface work, historical work done in the area, the mapping, etc., the geophysics, and the recent thesis work done. And then we needed to test that and prove it. So there had been no modern, I would say, modern drill holes. All of them prior had not done oriented core and not really done a full geochem suite. So we wanted to get some of that information so we could really understand what the controls were, and then use that to start predicting where more of these high grade shoots would be. And we've really only done a small program. 4,000 meters is not a ton. And I think we've been able to understand the controls and start proving that our hypothesis is showing up in the addition of new high grade shoots within this system so far.
And then the moment of truth would of course be finding the same higher grades as what they have at Red Lake across a widespread distance, basically, which is not quite the case being with this last phase 4 drilling for you yet. Why do you think that is?
Well, we really only pierced with a few holes, so I think that's pretty typical in these systems, that you don't hit extreme high grades on every single hole. In fact, oh gosh, maybe 20% of the holes will hit really high grade once you're actually drilling off the high grade system itself. So it's really, to me, the holes were great and what I expected. That high grade shoot that we hit, I believe, has 4 or 5 pierce points in total. So two of which are ours. So I think that's pretty exciting. And as we drill it off more, I believe we'll get that kind of better high grade intercepts coming through as well. But your average grade will be, you have a gram meter of over 10 grams, which starts to show that you have that continuity of a shoot.
What's your?
It is very nuggety. Sorry, it is
Right.
very nuggety, these kind of systems. So you can have, 300 grams per ton next to something that's 10, but you're in the right spot.
How are you going to deal with that? Because that's exactly what I was gonna say. Is what's your approach to dealing with the concentration of grades here?
Well, in these kind of systems, you really have to know the controls, because it can be very risky to assume you have strike continuity when you don't. You really have to understand what the geometry of these things are, and that you put into the way you do a resource estimate in the future, which we're far from at this point. We're in the explore and define more of it to have that be worthwhile. But those are some of the tools and things that it's nice to have in my back pocket from the years of Red Lake, and making realistic geologic models to match and use for your resource modeling.
Well, what's your internal thesis telling you though about where exactly the grades and widths might start picking up, as in where you are right now with this phase 4? Are you going to have to keep stepping out a sort of 100 meters, and what direction do you step out to?
Well, typically I would step out smaller than that. One of the things we wanted to do was take a little bit of a risk here to see if we had some continuity down plunge. So it was a bit riskier of a step out. And these things, typically, once you find something very high grade, you're going to do very small step outs. 30 meters is still rather big, and we did 100. So we're looking a little more than 3 times that, because we felt we had the plunge pretty locked on. So I think what we will do in future phases is kind of drill off a little tighter, make sure we have that continuity. We have not tested that new high grade shoot near surface, so there's a lot of opportunity to get shorter, inexpensive holes and really start to show what that grade is within the entire high grade shoot of that new one. There's also 2 other new high grade shoots that we really haven't drilled at all. The first, the highlight from our first phase 1 and 2 was 26 grams per ton over 3 meters. And that high grade shoot we haven't followed up on at all. And then through interpretation, we saw another that's kind of adjacent to what was historically defined with only 3 pierce points. So we've got a lot of potential to do tighter space drilling to start to show that there is continuity on these, which you do see in the long section where Manitou had done a lot of drilling quite close together on that shoot.
And I suppose over time, and knowing the Red Lake, the Red Lake mine, that mine has bankrupted a couple of companies already for a couple of different reasons here and there. One of those being that it's hard to model it because of the type of deposit that you're describing here, where it needs just way tighter. It just needs more drilling to model it properly. So
and good geologic controls. That was a big lack in Red Lake. So one of the reasons I got my chance in Red Lake was that we had new management come in. So the same group that leads Barrick, that was Reingold, Paul Harbridge came in and said, we're going back to basics and doing really, really strong geologic models throughout the company. And so that really helped us. We went from very bloated costs for exploration. $300 discovery costs are obscene, and that's how you bankrupt a company. We brought it down to 50, and that's from all phases of drilling. So that would be our grassroots drilling and all the reserve replacements and the exploration. So we were really able to use science to get better costs. And that's why I say, when we look back in hindsight at Red Lake, what would have really helped was doing that science first. We see it after, but there were millions of drill holes there that could have used that science, not selective sampling, geochem, using the geophysical signature. All of those tools that we have available to us weren't really used there. It was a drill first and kind of connect dots approach for a long time. Mm-hmm. So being able to do the science first really saves you a lot of money. And we were able to prove that in what we did at Red Lake. Unfortunately, sometimes people don't want to support science, and so it doesn't always continue. But I think that's really what we'll be doing differently here to save our shareholders money and really add value, because I don't like wasting money. I guess I'm just cheap, but that's something I really don't care for.
Well, we'll talk about money and how much you think all this is going to cost and where you're going to get it from and all these things a little bit later on. But I just have this last point here, maybe one of the last points on the geology, that you told me that the higher grades are not associated with arsenic or arsenopyrite. Maybe not strange, but interesting. So how come? Why? What is it associated with?
Well, so I said we do see the association, but we haven't seen arsenopyrite in the core. So we're doing thin sections to see if it's inclusions within the pyrite, because it may be, because we don't actually see arsenopyrite. Now in Red Lake, the highest grades were associated with a very, very fine grain arsenopyrite. And believe me, I can identify it. So I haven't seen it yet, and we're thinking that it might be part of the inclusions on the pyrite itself. And we're also doing some of this work to see what size the gold is, because we've actually gone back and relogged. We were doing this last week, relogging the core from the first 4 phases of the program to get a better idea of what the highest grades, why they differed from areas where we thought it looked good but didn't get as high grades. And it's surprising that we don't see a ton of visible gold in the core. So we're thinking it's quite fine grained, which can be good for, it can be quite disseminated and then more easy to mine, and then big chunks of nuggety gold. So there's still a lot to learn on this in this project, but I can tell you that the way we're approaching it is more of a science first, so that we can save as much money as possible.
So that you can eventually avoid having to bake it.
Yeah, I don't like the pitfalls of looking in hindsight what I should have done. We're going to try to do it all up front. Some of that fundamental work really does pay off. And if, I was just in a talk about the Great Bear discovery last week. I got to sit through Kinross explaining how they got there. And I saw a lot of similarities in the way we're approaching this deposit. Doing the upfront fundamental work really does save you money and help you make discoveries. So that's really where we're focused. Doing all the geochem, kind of the boring, unsexy stuff. It has to be done to actually make new discoveries and get the best bang for your buck.
Okay, fair point. Well, talk to me about what that's going to look like exactly during phase 5. I assume you wanted to start it soon, so it's probably already planned and underway. What is that going to look like exactly?
Well, we're kind of in the process right now of deciding what we want to do for the summer. Things are melting here, and we're looking to potentially have a pretty bad fire season. We didn't have a lot of snow and precipitation. So we have this huge land package, 600 square kilometers with a lot of excellent targets. We focused now on the brownfields opportunity right out of the gate to show that we could understand the structural controls and find new high grade within the system. But I don't want to forget about this great land package we have, because what could really be exciting is to unlock a new discovery in this camp. So we have put together a summer field program. We're looking at exactly what we would do for phase 5, drill campaign, which would be targeting the high grade shoots, more step outs, proving that they're there. And then looking for potentially other high-grade shoots based on the controls we see. So the intersection lineations where those structures are coming into the Manitou to Norwich shear, and so we have these kind of cross-cutting things. That's what we'll be testing. But I think it's really important to look at the entire property as well. So we've planned where we see strategic areas of these intersections along the Gold Rock camp. So some of the new ground we picked up at Cross River, going in there and doing some initial prospecting, mapping about crops. We had a really nice intercept on the field program last year on what we call Hindman. And that is on one of these D1 more east-west structures. That has been completely clear cut. So they were actually in there last year and the year before cutting all of that forest down. So we have an opportunity to very inexpensively do a lot of field work easily where it's all clear cut right now. And it gives us an opportunity to see the rocks without having to walk through the forest or use any really expensive tools to get a chance to do that. So we'll be doing work on that. And we want to do an orientation survey with the soil geochem. So some deposits that works really well, other places it doesn't. It really kind of depends on the glaciality. Anyway, Anna's quite an expert on that stuff. So she's been planning a soil sampling program, and we'll test that over. We're kind of arm wrestling where, but I think in the Gold Rock camp to see if we can vector in on the high grade areas, but using a very cheap method, which is the soil sampling. So we have kind of a phased approach here to really get a better understanding of the other opportunities on the property as well. And then we'll go into a phase 4. And it's really market dependent when we actually do that. I think we have some great targets on our horizon in terms of more high grade shoots to follow up on and new ones to test. But I don't want to forget about the entire property, because this is a great package that we've put together. And I think it really needs to be driven forward as well for this new discovery that I think's a monster lurking here, I hope.
Yeah, that's the forward-looking statements we always talk about. But
Mhm.
I hope you're right too. But what kind of trees are you mostly dealing with there? I'm asking in the context of forest fires.
Yeah, so we're looking at all different kinds of pine trees and birch and that sort of thing. We're in the boreal forest here.
Hmm.
So the last few years, we've had some really high forest fire risks, and we had a really wet season. So the weather has been crazy. I think that's everywhere all over the world, that it's been a bit more haywire over the past few years. So that's certainly a risk, and we're trying to figure out when the best time to drill is, either early or we wait till fall when we know we'll be able to get in safely.
That's exactly what I was going to ask. Like, do you want to wait till September or something like that? When do you think you're going to know more about the start date of the program?
As we go over the next few weeks, and as we kind of decide what the best approach is, and watching the weather. We have another opportunity that I haven't really spoke to, but we will be doing some relogging of core. I mentioned it briefly, but the previous operators did very selective sampling. And that is one of the reasons I really believe that Red Lake has such high costs. The core was drilled and they just sampled what they thought looked good based on their bias. And if you think about the Great Bear story, that's actually how they made that new discovery, going back and relogging, and they found some visible gold in core that had been overlooked. So I think if you're too set on your specific style of mineralization, you can miss something new, a huge opportunity. And in these Archean systems, yes, there's a favorite kind of rock, but sometimes there are other surprises that you don't realize there's a great host because of X, Y, Z. There's lots of reasons, right? So that's what we want to go back through is see what was missed. We already see when we look at this project in Leapfrog that holes next to each other, one will be sampled and have high grade, and the one next door doesn't have any samples where it should. So we want to go back and strategically look within the deposit itself, and then start bringing core back from some of the more step out targets that Manitou drilled, and see what they may have missed as well. Because it's happened time and time again when people have biases, they focus on that being their style of mineralization, and then you miss other opportunities. So that's the program we're most keen on starting right away, because it's, I think, a huge opportunity for us.
How much core are we talking about here? How many meters?
Well, most of the core drilled by Manitou is actually stored really nicely in the bush. So we're looking at I'd say about 20,000 meters that we do have opportunity to relog. And we'll be selectively doing the holes we think are most important that we have in good condition. So it's all been kind of cross-piled out on the historic mine site, which is kind of neat, because there's big pads. And I think for others that have talked to you before, you can actually find all the old mills. They're like stone buildings that are kind of left. The foundations are kind of all around Gold Rock. So it's kind of interesting, like a ghost town.
Relogging 20,000 meters of drilling, though, that sounds like a lot of fun. Would you get a bunch of a bunch of students from PDAG to do it, or like who's going to be doing all that?
We want to be really consistent, actually. So it's really just been 3 of us that have done all the core logging, myself, Anna, and our geologist, Brett. We actually were able, with the phased approach of drilling, to be able to have that consistency, the same eyes on all of the rock. We actually had the same drill crew too. So we think it's really important to keep that consistency and make sure that we've seen every piece, so that if there's something new or different, we can spot it on the next hole, or we can adjust the drill program that way. I think it's just really important for a small group like us off the bat to just really have that control over things. And we won't relog all of it. We'll strategically pick the areas we think would be the most beneficial, but we do have an opportunity to do a lot of relogging, which is nice.
Well, how much money are you getting paid to be that excited? I mean, you're excited about relogging core. You don't see that every day. So that's why I'm asking. Jokes aside, though, how much money are you paying per meter drilled once you get that program going, and how much money are you budgeting for the entire program?
Well, so I'm sorry, 2 questions. So how much are we
Sure.
paying for our current drill program? We're looking at about $200 a meter all in for the drill programs that we have done. And then you asked how much I'm budgeting for the relogging program. So myself, Anna, will continue to do that. So we're kind of budgeted in already. And then we have finally found kind of a final core shack location for us to set up. So I have to think about what the all-in cost is. Let me come back to you with that. But I think we're looking
happy for you to come back on this, but I was not asking about the relogging, but about the drill campaign once you actually start phase 5 of drilling. How much money do you think you want to put in the ground at that $200 a meter?
I would do it. I would like to do it similarly to what we did before in a phased approach, where we do another 1,000 or so meters over a 2-week program, look at the core, come back, do another. And I think another 4,000 meters would be a great start for the next campaign.
Okay. So $1 million is what you need here.
Yep.
For the drilling. Okay. How much money do you guys have now in treasury?
I'll turn it over to Trey.
We just made our payment to the to Manitou, $1 million. So we're down to about 1.7 million in the bank right now.
Okay. Well, that sounds like it's going to be enough to
that's
cover.
With basically everything. No, and with I won't say zero, but pretty much everybody from the first drill campaign, including assays, with some checks that went out yesterday, is pretty much paid up. So, it's not like we have a lot of, payables out there that are looming from the past campaign.
Okay. Yeah, that's fair. What about, as I like calling it, bureaucracy, that be marketing, team, offices, and so on and so forth? How much money are you budgeting for that?
We're actually doing a budget meeting right after this. So we've been very successful, we think, and we get a lot of compliments on, how well the stock is trading for a company that just went public in January, how well we've gotten the word out. We're doing a lot of the stuff in-house. If and encourage people to go to the website and, with every drill results and Maura does some great short videos and that are explaining the drill program and what we're trying to accomplish and what we did accomplish and all of that stuff is then also distributed on our social media. So we are planning. I'll be going to Europe and to both London and Zurich in the fall. So that's a bigger expense. But I think we're, at this point, we have Ashley, who's kind of full to 3/4 time, let's call her. She does have some other clients for in-house IR. And we, use the town hall meetings, the crux, kind of moving that around rocks and stocks, any place we can get, more exposure. We're trying different things, or I would say we're using the same things that we know were successful when we did this at Ely. And at Ely Gold Royalties, we were one of the first companies to do the town halls. And this was all pre-COVID when I realized, that going around to these shows, especially when the market was weaker, it was very expensive. So we're not going around and doing a lot of the individual shows as much as we are the town halls and building up our following and using social media. So I'd say we probably our total budget through the end of the year now is about $250,000 for IR and promotion.
And that's going to be on top of an office and then staff that you mentioned. So 50 grand a month. Would that sound reasonable? Do you think it's going to be above that?
For G&A, are you talking?
Yeah, just everything basically that's not drilling.
Yeah. Okay. So in your cost, and correct me if I'm wrong, Maura. I don't know if our drilling cost, both Anna and Maura, a large part of their salaries is figured in as drilling cost for the charitable flow through drilling funds that we're needing to spend. So I think 50 grand a month is probably pretty close. Might be a little bit higher than that, all in with travel expenses by the end of the year.
Okay.
And I'll just jump in quickly that we don't actually have an office, like a corporate office. We just have the field office. We're a very virtual company. We're all located different places, and I live in Dryden, so it helps. And Anna, our VP of Exploration, half of her life is spent here too. She has a summer home in this area. So we're actually pretty local, which helps to bring down costs as well. And that's why we are excited to actually get out on the property. I've stepped on the entire not every inch of it, but I've been on all parts of the property last summer. I wanted to really understand what we had.
Okay, good.
And
Yeah,
just
that's a good note.
Maura mentioned earlier that the space that we've putting together for to bring that core in out of the bush and to consolidate the core from our drilling now, which we've been using some warehouses in town. Some of the cores even got moved as far as Thunder Bay. So with this new place, and this new place will have a heated inside place for not only cutting core, but for storing and relogging, and then a large fenced area for securing all the core in one place. And I just to back up a second too, I think that want to give a little bit more emphasis to this relogging. And you mentioned early on that in this last phase of drilling, that deep hole was saw 4 mineralized areas: the hanging wall, both the Big Master 1 and Big Master 2 veins, and the footwall. We also drilled a hole down in the known high grade zone, call it, or right next to it, that also intercepted the hanging wall and footwall, and that was something that was for sure not very under assayed in the Manitou core. I mean, I'm not a geologist, but when you look at this in Leapfrog, it's pretty obvious that have a mineralized zone, and then right next to it is an area that's just untested. And when you look at a Leapfrog, you see the spacing and what was assayed and what wasn't. So can't stress enough how much opportunity we think is there in that relogging. And when you ask about the phase 5 drilling, that's going to be something we're going to have to decide if we because we may learn an awfully lot about that area up there where that very high grade hit is. And I'll point out something else about that area, that cross section, that high grade shoot there. Even when they did drill holes right around the 53,000 gram hit that hit nothing but the halo mineralization. So when we looking at this new high grade shoot, 400 on a 400 meter step out that we Maura and Anna identified in the phase 2 and phase 1 and 2 drilling. And then this last hole, again, 200 meters depth. It's the deepest hole we've drilled. So, and they were successful. They drilled 2 holes to that depth and, missed the structure with one, but hit the structure with the other. So, we now have that ability that we know the plunge of that high grade structure all the way down to 200 meters, yet we've only put one other hole in that at about 50 meters depth. So we've got a lot of work now to do, where we can splay and put a lot of drill holes into that. And we think we will see more of the higher grade, but they can't stress enough that we have not just gone in and drilled a lot of holes around where we know there is that high grade structure, that one high grade shoot with the super high grade in it. Maura and Anna they've been pretty ballsy. They've taken some bold step outs, both 400 meters to the north, found the structure over on the Elora vein and hit 14 meters over, or 14 grams over 7 meters. Stepped out 400 meters to the south and found this high grade hole. Stepped out 100 meters more and drilled underneath that structure, 200 meters of depth. And so in these systems, to be, Maura kind of mentioned it, 20 to 30 meter step outs are large. And we're taking, we're taking chunks off 100 meters at a time to not only show the footprint, but that this has, potential, more and more potential at depth.
Well, talking about that, by the way, more these two shoots, they look like they want to meet at depth. Is that possible, probable, plausible? What do you think?
It's possible, and we are seeing that as we go to the south, everything is getting a bit closer together of those four hanging wall, footwall, and the two main structures. So that is quite possible. And in these kind of systems, you see it's a bit like a river where it's braided. Things come together and come apart. So that's not uncommon, and it kind of has to do with the shear zones are kind of like a river. So it's not uncommon. And that's where some of the best stuff is. So we're really working on the geometries and how we can understand them prior to even drilling. So using all the geophysical tools and the surface expression. And we are lucky here that because of the solicitation alteration, this is actually higher ground. So we do have outcrops of the mineralization at surface, and it gives us kind of a rare tool to be able to use. To see this on surface and understand it in a little bit more context than you always get.
So with this phase 5 drilling, you probably want to go and test the potential for that.
Yeah, there's a lot of different things we have on our radar to test, but I really think it's important to show more continuity of these high grade shoots that we've defined so far. The historic one and the one that's kind of next to it. There's really nothing saying that they don't come together, and that would be excellent because that would be quite a long strike length for one of these high grade shoots. So something that I want to be able to test is put a couple holes between them. There's quite a big step out between those two with very little information in between cutting them off. So lots of good opportunities. And like Trey said, some of these things are a little bit more risky. So we balance, testing the theories with things that we think we really understand and can get sure things from. So it's very much a scientific approach.
But it sounds like it's going to be deep, though. Do you have any assumption or what sort of your gut feeling as to how deep they might meet each other?
Oh, hard to say at this point how deep they'll go to meet each other. I think you're looking more like 500 meters from the model that we have so far. So that's not an insanely deep hole. I think our opportunity now in this market and this early in the game, because remember we're like a 4-month old public company, will be to do things that are inexpensive first to kind of keep proving our thesis up before we do more expensive step outs at depth. The 200-meter intercept, we really felt strongly that we needed to do a deeper hole because that area had the potential to have all 4 zones and had been very sporadically sampled in the few pierce points that existed before we drilled there. So we thought it was an important test, but I would like to do shallower holes first as we're basically a baby company and keep understanding in our controls so that we can be very successful when we do this deeper step out. I want to get the best bang for our buck and our shareholders.
Sure. And I can certainly appreciate that. What about permits, locals, other environmental things? How's everything looking? Can you go and do all that work that you're telling me about here?
Yeah. So that's a great segue. So yesterday I was out visiting both First Nation communities in our area, meeting with them to talk about what we're thinking for the summer program, talk about how the drill program went. Something I felt was really important, and being a local myself, was to get out and introduce our company to the community right away. And I think it gives us a big benefit, me being here and being able to run into Chief and just to community members at the Walmart or at the grocery store on a regular basis. People see that we're here. We try to promote local work as much as possible, use local contractors, use local people. So I think we have a bit of a leg up there, and we're really taking an approach of speaking with people first and getting the buy-in of the local community. a lot of people here work in mining. They either work in Red Lake or work in Rainy River Mine, and commute. So there is actually quite a interest in seeing a mine be built in the Dryden area. So that's very exciting, and I think will help drive our success, I think, in the future, the way we're approaching working with people here.
Good.
Let me follow up on that too, Antonio, is that, we are very fortunate in this project that, that very high grade hit from Manitou was at about 75 meters depth. We have, they followed that up with all holes that were less than 100 meters depth for the most part. A lot of what we saw over on Big Master, when they were successful in phase 2 with that step out over onto Big Master 1, the 26 grams, that was fairly shallow. We have the benefit here of having this system of good high grade gold near surface. So if you look at the first program, other than that deep hole on that step out, the 200 meter, probably our holes have averaged about 100 meters. So we're able to increase the footprint, identify these high grade chutes, and the key is along that footprint and where we know is mineralization to find more and more. Also point out that where we're drilling now, and we have about 7 kilometers of strike length on patented ground. So as far as permits, we'll need permits to drill further north, but we can go quite a bit to the south, all the way down to the new Cross River claims. And the Cross River has a permit on their ground. So that ground came with a permit. So we're in pretty good shape, but as Anna said, we're involving the First Nations in everything we do because it's important to have that relationship and make sure that they're not feeling uninvolved for sure. But we aren't in a position where we have to get permits to continue to do some significant drilling.
Yeah, but we've acted as though we were getting permits for everything we've done so far in terms of the way we've brought up things before doing them and worked with the community to mitigate any risks or concerns they had. So I think that differentiates us a bit from other junior companies, that if you have patented land, you kind of go ahead without. We don't want to do that because we feel we're part of the community too, and want to have a good impact here on Dryden.
Good. Yeah, well, again, I can appreciate that, and I also appreciate the overview here. I think I've gone through most of my questions, though. What am I forgetting to ask you, though? What did you come here hoping to talk about that I'm failing to bring up?
I think you've covered it pretty well, Antonio. I think we've, again, stressing that the program that we're putting together, we're so fortunate to have both Maura and Anna with their Red Lake experience, with their local residents, and again, I think when you were asking the question about the core logging, this new facility we're looking at for storing and logging core and cutting core is about 10 minutes drive, maybe 15 minutes for Maura. So a little further for Anna, but again, they're right there local. So we are a small group. We're trying to use local talent where we can, but keep the G&A down. Definitely, this is not a lifestyle company. We're looking to make a major discovery here, and we think we have all the ingredients. We'll just intend to keep soldiering on, if you will, and the market being tough as it is still, even with the price of gold up, we are market dependent to some degree, but we do have a very good shareholder base that we can go back to and when it's time to raise more money. So we think we'll be operating here for the next 12 months and possibly raise a bit more money in the if we have to, just a small amount of more flow through to get a fall drilling program, maybe a larger program together in the fall. But otherwise, we've got a lot of work to do with what we have already to better understand the systems here.
Good. Well, Trey Mora, again, it's been great talking to you. It sounds like you have a fun day, though. You're going to be talking, first of all, you're talking to me, and then you're going to have to talk to your guys about budget. So it sounds like a very fun day ahead of you. I'll let you do your thing, but thank you so much for spending your time, investing your time with me.
Thank you so
Antonio.
much. We really appreciate it.